Yeah, you're good.
Yeah, I can hear you.
Good. Okay, cool. I started the session, but I'm just going to recap quickly how to get through Bloomberg marketing concepts, right, to get that certificate. I'll probably share my screen so I could sort of, y'all can maybe follow along. Because one thing that I did want to do in this session was get y'all registered, sort of talk more about the importance, right, of the certificate. So I'm just going to start off. Okay, so say that you're looking for the marketing concepts, the Bloomberg marketing concept certificate, or that those modules to get the certificate. You put UTSA library. You put databases. You would go to F for finance. Oh wait, no. No, it would not be. Oh, yeah, you go here in UTSA library databases. You scroll all the way down until you get to B, and you hit the Bloomberg Marketing Concepts link. And of course, I think this section should be straightforward, but just in case, when you sign up, you're signing up as a learner. You put in your UTSA email, so it knows that you're a UTSA student, and they don't charge you for the certificate. I think otherwise they would charge you like $300 or $250. So put in your school email, and it comes out free. And you just set up your account, and it's a pretty straightforward process. And if you do have access as well to the Bloomberg terminals and you want to come and work on them there, you can also access it through your Bloomberg terminal using your account. So essentially with this, you have two options. You can essentially come, use the terminals and get the certificate like that, or you can also do it online. And from what I have understood is you can sort of, you can do it online, right, without using a terminal. And then once you actually do use a terminal, you can access all the work that you did prior. Just that you would use your login, and those links will pop up when you put like a function of BMC, I think. But regardless, right, those things we can sort of hash out more of the details later on when there's more people in class and more people are sort of using the terminals. But once you sign in, right, it should prompt you. It should prompt you to these 4 pages, right? So economic indicators, your currencies, fixed income, and equities. Those are going to be the 4 key ones that you're going to want to complete to get the certificate. And additionally, the terminal basics, like I sort of mentioned before, commodities. These are not, this doesn't go towards the certificate, but they're definitely helpful. And if you sort of want to explore your knowledge more, you can definitely look into them and read them. And I think as long as we have time, right, we can definitely go over them. But essentially, something that I did want to talk about, sort of the benefits of this program or the certificate, is that majority of the things that you're going to come across here are things that you'll get sort of asked in an interview, right? It could be in terms of, what's happening in the market, right? Or, how do you calculate a bond yield, and how do you calculate the price? So these are all things that will sort of be touched on in these modules, right? In terms of like a high level sense. So when you look at the economic indicators, you'll look at GDP growth, right? It'll give you certain functions that you can use to sort of look at the prior history and see maybe what people are saying in terms of the future, right? And in forecasts, and also highlighting things like the employment report that comes out every month. Using these like modules, I mean, these are things that I was asked, right, during my interview process, and sort of going through these modules reminded me like, this is definitely, this is important and it has significant value. And I think it gives you a really good high level sense of what you should be expecting if you do decide to go into a field, right, in terms of finance. So I think that's very beneficial. And another thing that I would like to sort of state is, the modules are sort of long. I think in total, well, I'm not sure how many hours it takes to complete all of them, but it's not something you can just do in like an hour, right? These definitely take you know, I'd say effort, right, to read things and then also answer the questions afterwards, because they do post questions that sort of reflect what they're covering on in the video. So I would say, yeah, when I was going through the process, I think it was a great experience because I was able to learn about all these and go more in depth, right, and also learn about the functions that you can use on a Bloomberg terminal. I think that's also great supplemental information. So if you do decide to do it just online, right, you will get a better understanding of these four fields, currencies, fixed income, equities, but it'd be really great as well if you can come into the FSC and sort of apply, right, the functions that they'll actually teach you in these modules, how to apply them on the terminal and how to graph things and whatnot. So apart from a great introduction to these four topics, you can also get really familiar with the Bloomberg terminal. And of course, going forward, right, in your career, that can be super beneficial.
I would say if you do it at home, something I did is just the UTSA, and I got to take it with me, but I had a Word document with all the Bloomberg functions that I really liked. I probably had 3 or 4 pages of them. Have a quick discussion. So if you do this at home, you see a function, keep track of it, so when you come back to the FSC, you can try something. But Sergio, I found online that says it takes about 8 hours.
8 hours? Okay.
Spread it out.
Yeah, no, and something I did want to maybe try to like combine, right, with this class is other applications. I think, in terms of what they teach you in the modules, they teach you like a high level sense, right? But you can also go way more in depth with maybe the application, the use. I know in one of the modules in fixed income, right, they talk about inflation and how that might erode the returns of a bond. So they calculate like 10-year yield and like a 10-year tip. And they just subtract, right, that difference. But there's also, you can do like 5-year forward rates and you can see what the market might think, 5 years from now, using those two and then using a formula instead of just subtracting them. So I think going forward, right, that can also be another option where just to supplement the information that you'll get on this, I think it'd be fun to also add other applications. But yeah, I think that's sort of high level what I really would want to do. And the way I would like to design this class is I go through, right, each module, sort of tell you what the key things that you're going to need, the key things that they're going to ask you about. There's not necessarily, I'd say, filler, but there's some parts that are really, you might not get asked on them a lot and they might not be as important. So definitely sort of, I'll be here to emphasize, right, the key things in terms of what they're going to ask you afterwards. And yeah, and in terms of grade, I don't think that they actually grade you. I think as long as you get more than a 70, oh boy, as long as you get more of a 70, you should be good. And then yeah. So from what I have understood, because they actually do give you some grades, and I'm just assuming because it wouldn't make sense for them to give you a grade if it's not actually calculated when you gain a certificate. But they're fairly straightforward. And going forward, right, I'll be going through the modules and sort of showing you, these are the key things and key things that you may need to know going forward. And yeah.
Are you planning on doing modules during the class, or are you going to assign those modules to watch and discuss them?
I think I'll assign them. And then I'll do them in class, sort of touch on the key components.
If there any what you want to see for next week?
Well, a great one to start off is economic indicators. I definitely recommend that one because it shows you like an aggregate view, right, of the market, key things that you should be looking at, quarterly reports, things that will really affect, just general market movement, I would say, and it's a good introduction. So I would recommend doing the economic indicators first, and then subsequently, right, in the next class, I'll be able to go through it. Okay, these are sort of like the main concepts, and I might even add like a new application or something that I might think that's interesting and useful. But this is essentially sort of the order I think that we would go is economic indicators, currencies, fixed income, and then equities. These two are relatively, I think you can do economic indicators might take you an hour 30, maybe 2 hours to complete fully. Currency is the same. And then I think fixed income and equities was longer. And then afterwards, right, if we still have time in class, we can touch on, terminal basics. Although I think it's still implied, like when you do the market concepts modules, they'll show you the functions and they'll show you how you have to navigate. And then, of course, commodities and equities, we can also touch on those going forward. Oh, portfolio management.
Yeah. Okay.
But yeah, I'm not sure if anybody has like any questions, those sort of.
I think if you're gonna do the program here, here.
Oh yeah, you're right. Yeah.
We've had people try to do
But yeah, and I think this is super beneficial, and not a lot of students know. Right now, a lot of finance students know that you can get this certificate for free. And again, I think, let's see, how much does it cost? What should be like 50? No.
It's,
2.9. Okay. Yeah. So UTSA, you can get it for free. So I think that's a huge plus. Oh yeah, definitely.
all right, yeah, I'm sorry, some of the classes may require it, so I don't think your classes require it.
Not, you had one?
Yeah.
Oh, okay.
Back, well, that was the graduates as well. Yeah. Undergrad,
Oh, that's interesting.
yeah, for principal.
Oh, really?
I might in the future, I'll see. I've eavesdropped on several of them. The projects you think of the numbers. All right, yeah,
I'm not sure if they have like a capital like Q equivalent.
Standard & Poor's, I have to tell you, there's a lot there that we haven't been using. They have conferences, they have videos. Yeah, there may be something there.
Capital like Q fundamentals.
I think Standard & Poor's is more focused on people in the business, not students. That's like you, it's definitely.
Now,
Sound like, Standard & Poor's.
oh, yeah, no, this is, yeah, I got it now. Well, I mean, capital Q. So Jay, Hearn, and Sebastian, I'm not sure if y'all needed any help accessing it, or did y'all think as well that it was pretty straightforward?
It's pretty straightforward, and I actually did the certificate over the summer.
Oh, okay, look at that.
Yeah.
You should join me, man. We teach this class together.
Wait, so the class in person, like, do we actually get to use the terminal?
Yes. Yeah.
Okay.
I think normally, right, Professor Sweet, the FSC will be open.
Yeah, for all the classes.
Yeah, for all classes. So you could definitely come in and get yourself a terminal and sort of do your own analysis.
Yeah, just so I can actually like apply it in person. So.
Okay. Yeah.
Get emails.
Yeah.
Right, I'm gonna do the email, I think
Oh, we have some chat? Can we access this remotely? Oh, yeah. I think I answered it by now. No remote access. I don't think so, Jay. I think we would need to have been considered like disaster, we would have had to been under the something in terms of their disaster program for us to have like remote access, I think, to their.
Someone got Bloomberg Anywhere, and then Bloomberg changed their mind and went back charges for it. Bloomberg is not very supportive.
Yeah. So I think,
They didn't go back on any of the contracts. They paid fair, numbers. They were real nasty. I see them.
yeah. Yeah, I know that's something I tried looking at if we had remote access, because I think other institutions were able to receive that and just download a program onto this or their PCs and get it. But let's get some people to push IT to get this done. Yeah.
A couple of graduate students got it, and then you gotta get the machines fixed. Four machines, 12.
What's the process of that? Like, is it just calling the IT or?
I don't know how much it's Bloomberg. Well, I already emailed IT and I would have thought they would have been working on it some of them. Yeah, so I think it's more easy to say IT. So, but yeah, they submitted up and running on this first. I fixed the clock.
Fix the clock.
I'm gonna actually work hard to get even the second hand lined up. I'll put the battery in right with the second hand. All things. So I have to look up the time when London. London, 6 hours ahead or so. All right, right, so yeah, we get names and.
Oh yeah, man. We're about to do this marketing push, definitely. But yeah, I think I had Jay. Yeah, and Sebastian, if you need help as well, feel free to drop it in the chat, or if you're good to go, I think, feel free to exit the Zoom. That's all I wanted to do was make sure that people knew about the resource or the importance, how they can register, and going forward, right, what to expect in terms of the modules and those teachings.
If y'all are here for the FX and trading, one, I'm Jabari Aiken. I don't know if y'all know me or not, but this is just kind of an intro to foreign exchange and trading. Over the course of the semester, I'm just going to be going over the basics of technical analysis, especially in these first couple weeks. Today, I'm just going to take you through, this is the Candlestick Trading Bible. It's something that I've kind of went through and kind of self-taught myself how to trade through this. I've read it like 5 or 6 times. Really good information in there. It covers everything from the different type of candlesticks to understanding the trends of the market. And so we're going to go through this throughout the semester. The first day, just today, we're going to go through the main candlestick patterns to look out for. And then we'll just build off of that throughout the semester. And for those that are interested, I'll teach you how to get set up with your own like demo trading account so you can like practice. And each week I'll go through and call different trades and stuff like that. And we'll see how they perform throughout the week and then come back the next week and go from there. So, and then you can also call your own, and hopefully by the end of the semester, you're able to set yourself up with your own trading account and know how to trade and stuff from there. This is going to focus on the foreign exchange market. The good thing about technical analysis is that for the most part, it performs and applies to just about any market that uses the technicals. So you can use this to trade commodities. You can use this to trade oil, gold. You can trade stock options using technical analysis. So I'm just going to get into it. This is the Candlestick Trading Bible. Anybody who wants this, you can reach out to me, or I'll actually just send it. I'll send it to the Investment Society group chat for anybody who wants it. don't really need to go through the history of the trading of the candlesticks. Just so you know, though, what is a candlestick? Japanese candlesticks. This is what they look like. They have an upper shadow, lower shadow, a real body. Depending on where so this is obviously a buy candle, just so you know, this is a buy candle, this is a sell candle, right? So on a buy candle, it's going to open here and the momentum will be positive, which is why it's a lighter color. On your chart, it'll show up as green or blue or something like that. And then the sell candle is going to open up here. It's going to have negative or downward momentum. And then it's also going to be shaded black. If I go too fast, just kind of stop me, ask questions and that type of stuff.
So FX, boy, I don't know FX. So does it open and close like stock market, or is it?
No, that is
Why does the open and close? What time?
that is a great question because I always forget to say that. Okay, so the foreign exchange market is 24/5. So it opens Sunday night. We're in the Central Time, so it opens Sunday night at 5 p.m. And it runs from 5 p.m. Sunday till 4 p.m. Friday, 24 hours a day. And so actually, I should cover that. Let me cover that first. So understanding the foreign exchange market before we even get into the technicals, because understanding how the market works will help you with the technicals and it'll help you with the trading psychology. So the big players to consider in the market are major banks, companies, governments, and then there's us, the retail traders. You want to trade with the major banks because the major banks flood money into the market to move the market. Okay, the foreign exchange market moves on what we call pips, right? So similar to how stocks move on currency and just dollars, you make your money in the foreign exchange market based off of pips. Okay, and each pip is calculated differently depending on the pair, and I'll get into that a little bit more as we can continue to go through the market. But yeah, the market opens Sunday night, 5 p.m. It's 24 hours a day, all the way up until Friday. Cryptos, on the other hand, trade 24/7. So you can trade cryptocurrencies 24/7, 24 hours a day, 7 days a week. That's kind of why I like cryptocurrencies. But yeah, so the market opens then. You'll see if you go out there and look, as we keep going through the weeks, I'll be posting different job offerings for FX traders at banks. You'll see they have the jobs broken down by different sessions. The market itself is broken down into different sessions. There's 4 sessions. There's Asian session, New York session, Australian session, and then there's Asian, New York, and then European. European session and New York session are the 2 largest, New York being the absolute largest. Asian session starts the market, it begins the market at 5 p.m. on Sunday. And if I'm not mistaken, it runs from 5 p.m. to about 10 p.m. And this is all based off of Central Time. So obviously, if you were in Eastern Standard Time, it would move up an hour and move back an hour, but I'm just going off of Central Standard Time. And then about midway through there at about 9 p.m. is when the Australian session opens. No, I have it backwards. I'm sorry. I have it backwards. Australian starts the market, then it goes to Asian. Those are my least 2 favorite sessions to trade. So as you can see, I'm not the most versed in those sessions. They have the lowest. Those are the lowest times to trade. It's not a lot of volatility. It's not a lot of volume in those 2 times. So those are the 2 lowest and easiest times to trade because there's not a whole lot going on. Asian session, like I said, though, it runs throughout the night. European session picks up at about 2 o'clock in the morning. It goes from 2 a.m. to about 11 a.m. our time. And then obviously the New York session opens when the stock market opens. Actually, it opens 30 minutes before the stock market at 8 a.m. And then it runs to the close of the foreign exchange market. So one thing to notate, even though it is a 24/5 market, so it runs 24 hours a day, 5 days a week, there is an hour break. So when the stock market closes, the New York market closes, the foreign exchange market closes until 5 p.m. So the stock market will close at about 4 p.m., 3:30, 4 p.m., somewhere in there. The foreign exchange market will also stop trading Your trades will still be live, all of that good stuff. You just won't be able to get in and out of trades, specifically if you're trading indices or commodities. You don't want to get in and out of those, or you can't get in and out of those trades. And then if you were able to trade a currency pair, because sometimes depending on your broker, it will let you trade still. But the spread is a lot larger. So it costs more to get in the trade during that time period. But we'll also cover a lot of that as we continue to go. The one thing I wanted to cover today, like I said before, is the candlesticks, because this is the basis of technical analysis. Understanding the candlesticks, understanding the market structure will allow you to be more successful in the market. And then as we keep going, I'll give you more background on the banks, where they sit at, as we look at charts, because there's different places, different buy orders, different supply and demand zones, order blocks, things of that sort, that you'll be able to see in the chart once you get used to looking at the chart. And so you know that those are places where the banks sit at and wait, and they're waiting to make their moves in those different places. But we'll go into that as we keep going. This is all, I'll provide this to y'all. So if you want to read this intro stuff, just about, kind of understanding a candlestick, you can. All you really need to know is that the candlesticks are how we read the market. That's really all you need to know. A buy candle is going to be a positive candle signifying buyers in the market, buyer momentum, and then a sell candle will obviously be the opposite, or a bear candle. It will signify sellers in the market, sellers momentum. One thing to notate, contrary to the stock market, the foreign exchange market, we make money whether it be selling the pair or buying the pair. So oftentimes you'll short a stock or something like that, but you can actually call a sell, like on the S&P 500, right? Recently it took a big dip. You could have called that sell, and we'll look at that as we keep going, but you could have called that sell and rode it all the way down to the bottom of its drop and made money off of that sell. And then obviously you could have bought it back up. But we'll continue to look at that as we go further. But like I said, the big thing to take away from the candlesticks is that this is how we read the market, right? There's long candles, short candles. The big thing to take away from long candles and short candles is just that the longer the candle, the more momentum, the more volume. The shorter the candle, the less momentum, the less volume.
What I was asking on currency then is, you got open and close. So I assume you're doing the candlestick on just the New York or the US market time, right? You just do 9:30 to 4. Your open's 9:30, your close is 4.
So you can trade. So I think are you asking like?
But when you make the candle, you have to define what open means, what close means.
Yes. So
the New York market you're talking about there?
No. So there's different time frames. That's a great question. So there's different time frames that you can trade off of. And actually, what I'll do is I'll pull up a trading view.
And it's not 23 hours. I opens at 5 and closes at 4.
So let's see. Let me see if I can pull up. So let's actually pull up a pair, and then that'll give you a better explanation of the candles.
You might want to share your screen.
Okay, so cool. So let's just look at one of my favorite pairs, the Australian dollar versus the US dollar. Okay. As you can see, I've already kind of been in here. So I'll take that off. I'll take that off as well. And then I'll take that off for now. And I'll take my moving average. So boom. So I think what you were referring to is where does the candle open? Where does the candle close? So when you look at the charts, you have different time frames that you can look at. right? So you can look at the chart and analyze it from the minute time frame all the way up to the weekly, the daily, the monthly. So if we wanted to look at the daily, like you were saying, yes, this daily candle would have ran from the beginning of the market when it opened at 5 p.m. and it'll close whenever the day technically closes at 4 p.m. Yeah. And then the next candle will start for the next day. Yeah. So the next candle will start then for the next day. But if we were to come down to like the 4-hour time frame, and actually no, it starts. So the next candle for foreign exchange pairs will start right after that next one closes. So if it's the daily, it'll close at 4 p.m. and then the next candle will start at 4 p.m. The only thing is like it's weird. So certain brokers allow you to get into the market in that 1-hour time frame. A lot of brokers don't. My broker doesn't. It's just because it's just because the spread during that time frame, it's so expensive to trade during that time frame that I just kind of don't even count that hour just because of kind of how it's structured. But yeah, so if we're on the daily time frame, this candle will represent one full day. This candle will represent yesterday, so on and so forth, right? You come down to the 4-hour time frame. These candles represent each 4-hour interval of the market, right? And then it just kind of, as you keep going down, hour, 30-minute, 1-minute time frame, whole lot more activity down here, whole lot more activity down here. So this is that's kind of how the opening and the closing of the candles works on the different time frames. No problem.
Which time frame do you use for that?
I use the 4-hour and the daily time frame. When I first started my trading journey, I was always on the 1-minute time frame, just because. So the person who kind of got me into trading, all he used to use was the 1-minute time frame, and he still uses it. And so when I came in, kind of learning from him a little bit. And trading with him, that's all I used was the 1 minute, the 5 minute. I didn't go anything over the 5-minute time frame. So I was always in and out. I was a scalper. I didn't stay in trades for more than about 15 minutes. So I was always in and out. The reason why I switched is as I read the Candlestick Bible, as I read other books, I've read like 6 or 7 books just on trading. And I've read the Candlestick Bible like 5 times. Just as you keep reading and as you keep understanding, you start to realize that the higher the time frame, just the more, not just cushion you give yourself, but the more you can really see. So you can see the overall trend. So for example, and we'll get into trends more, but for example, it's in a downtrend per se, in this zone right here, right? So right in here, it's in a downtrend. It's kind of consolidating overall, but it's kind of in a downtrend, not really moving upwards. But then if we come out to the 1-hour time frame, right, or the 4-hour time frame, it gives us a different picture sometimes. The further and further you go out, right? The further and further you go out, the more you look at it, the more you can kind of see. Okay, so you can see different support and resistance zones sometimes when you come out higher. So that if you were to go down to the 1-minute time frame, you would know why when it came here, and I'll zoom in, you would know why when it came here, it had a big buy candle, and then it followed by a huge sell candle, just to come back with a big buy candle. You know what I mean? When you come out to the higher time frames, you kind of can see, and I'll explain this more later, but you'll kind of see, this is a zone that is having trouble breaking through, same way as this is a zone that it has to respect. Okay, and so once you start to understand those things on the higher time frame, it makes your trading better. And then I found myself to be more consistent in my trading. I've won a lot more trades on the higher time frame than I used to. I only get in like 2 or 3 trades a week now. And when I trade pairs, they're usually similar pairs. So if I trade the Australian versus the US dollar, Also trade the New Zealand dollar versus the US dollar. Because I mean, Australia and New Zealand, they're right there. And as we'll see later, their charts literally move the exact same. When I trade cryptos, I trade Bitcoin and Ethereum at the same time because they make the same moves. When I trade the indices, I trade the S&P 500 and the Dow Jones at the same time because they make similar moves. When the Dow is dropping, the S&P is dropping. It's not always the same with the NASDAQ. Usually it is, but it doesn't always correlate. But it makes the same moves. So the 4 hours, my baby, that's kind of where I stay at. I do my analysis off the daily or the weekly time frame, but the 4 hours where I get in and out of my trades at. So let's look at a few of these candlestick patterns. Again, this is just telling you about what the candle is, like the basics behind candlesticks, right? And I'll share this with you so y'all can kind of read through that. But this is where we want to get to. These are all that I'm going to cover here. These are all reversal candlestick patterns. So when you see these in the market, that means usually, not 100% of the time, it has to be followed by other confluences. So whatever your total strategy is, it has to match everything. But usually, these candlestick patterns means that a reversal is on the way. Okay, so this is the bearish engulfing pattern. Simply put, the easiest way to explain this is that you had buyer's momentum at first, right? You had buyer's momentum, and then following the buyer's momentum, you have a lot of bearish momentum, right? So buyers are still in the market here at this candle, and then boom, sellers come into the market and they engulf or they take over the momentum of the buyers. Okay, this is a really big reversal candle pattern to look for, because usually this means that the buyers have lost. When a big impulsive movement like this comes after a buy candle, it usually means that the buyers have lost momentum and it's time for a sell, right? Same concept in its opposite. Okay, well, let's see it here, right? We see it here inside of a chart. Okay, so you have a good upward trend, good upward momentum. You get a really small buyer candle, okay? And then followed by that, you get a nice long sell candle, right? And then you see obviously how it continues to dip. And this is just for example and illustration purposes, but this is literally how it will look in the market. Let's see if we can find an example. So boom, here's an example right here. Where did I just lost it? All right, well, I'll pick this one. Boom. Here's one right here. Where's my links? Boom. Here's one right in here. Right. Okay, so you see, nice little small upward trend, small buy candle, big seller candle, right? Continues to sell a little bit longer before it meets what you'll find out later is a support zone and comes back up. All right, let's see if we can find another one. That's not technically one. Let's see if we can't find another one. Boom, another one right here, right? Huge sell candle right here, right? Boom. And then the overall trend continues to drop. It does try and come back up because this, as you'll know later, as I'll cover later, this is such a big impulsive movement that the market hates impulse. And we'll cover that more later. The market hates impulse. So you see this big sell candle and then it tries to recover. But ultimately, what's the market continue to do? It continues to sell, right? So this was a good reversal call here. Uptrend, bearish engulfing into the sell, okay? And then even further, it keeps selling all the way down to here, right? Okay, so Next, we're gonna look at the opposite of that candle. It's the bullish engulfing candle. Same concept as the bearish engulfing, just in the reverse. Okay, so for the bullish engulfing, this is gonna be a buy candle signifying the reversal for the buy. And so you're gonna start off with a smaller bear candle, signifying that sellers are still in the market, and then you're gonna get a really big impulsive buy candle engulfing that candle, signifying that bears do not have the momentum anymore, and the momentum has shifted to the buyers and to the bulls, right? Good example of that, perfect example right here, right? Small bear candle, huge bullish engulfing candle, and then it continues to buy all the way up to here, right? So perfect example right here. Where else? Here's another example. The market doesn't necessarily completely respect it in this case and continue to buy, but still a good example. Where else? I think those are the best two right now. The thing to remember with these though is that all of the different patterns that I'll show you today, they're all best used and they work the best when they're met at trend reversal zones. So there are certain zones in the market that are sensitive to reversals, that are sensitive to price. Those are called support and resistance zones, supply and demand zones. There's order blocks, things that I talked about earlier. These are areas that the banks play around at. These are areas of liquidity. And these are also areas where you'll see some of these reversals pop up. So for example, if you have a bullish engulfing or something like that, but it doesn't match with other, perfect example here. No, that wasn't what I thought it was. Basically, if you have one of these candlestick patterns pop up, but it doesn't match the trend, if it doesn't match one of the trend reversal zones, something like that, then they might not be valid, right? And we'll cover zones a little bit later in this book, but I want to keep moving. So here, good example here, right? Bullish engulfing bar, and then it continues to buy up after that. Decent momentum for the sell, catches the bullish engulfing bar, continues to buy up after that. Okay, doji candlestick pattern, one of the best candlestick patterns to trade off of. You can usually, I know people who, they don't use any other confluences, any other strategy. They literally just look for dojis to pop up on the chart, and then they trade the reversal. The doji candlestick pattern shows, I want to use the word that they use, indecision, right, or equality. Basically, it's where nobody is won. When you think about the markets, when you think about technical analysis, you got to think about it as a war between two sides, right? War between buyers and sellers. Okay. When you think about it that way, it makes everything a little bit easier. And also, when you pick a side, it makes everything easier. So if you say I'm only looking to get into sales, you're only looking for sell confluences, and then your trades are usually be a little bit more accurate. Same with buys. If you're only looking for buys, your trades will be a little bit more accurate. Basically, a doji candlestick is where there's been, if we look at it again, like a war, right? There's been a war. The sellers have had their time. The buyers have had their time. And at the end of the day, it's a stalemate, right? They've met in the middle. This is a big, big reversal candlestick pattern. Whenever you see this, whatever the trend is doing, usually it's going to reverse. Okay, usually it's going to reverse. Usually that means it's going to reverse because, like, let's say we're in a seller's market, right? Let's say we're in a seller's market. The trend is trending down. You catch a doji. The sellers do not have the momentum anymore. You see a candlestick pattern like this pop up. You see a doji pop up. The sellers no longer have the momentum. The buyers might not have been strong enough on this candle during this time frame. If we're looking at the 4-hour time frame, during this time frame, the 4-hour time frame, they might not have had enough momentum or enough power to completely take over the bears or the sellers, right? But they're there, right? They're there and they're not going anywhere, right? So they might not, so this candlestick might pop up and the buyers don't win, but the next candlestick, they're there and they're coming to buy this time, okay? Usually it means that wherever the trend has gone, it's losing steam, okay? Wherever the trend has been going in that direction, it's losing steam and the opposite side is coming into play. So let's look at this one. As you see here, this is a buy, this is the uptrend, okay? You see the indecision, you see the doji. Right after that, you get a nice bearish engulfing as we just talked about, and then you see a sell, okay? And a lot of times, as you'll see further on, as we keep going through some of these candlestick patterns, they'll play off each other a lot of times. So if you see one, you'll usually see another, and they'll kind of meet each other. So we see a doji here, and then we see the bearish engulfing. And then as we'll learn later, these three candles all together are a pattern in and of itself, okay? So the technicals, they all flow together. And that's why I was saying earlier, it's good to have multiple confluences. And when these are met with other confluences, they usually work the best. So if you see a doji, right, and then the next candle, you see a nice bearish engulfing, you can feel confident about getting into a sell, right? If you saw a doji though, and then the next candle, you saw another buy candle, you know what I mean? You might not feel as confident getting into the sell. Doesn't mean that it won't sell, right? It just might not be time to sell.
On the side, over to the right. We have the tie.
But yeah, it might not be time to sell in that case. While that's loading, I'll try to find a doji in the market over here. So boom. Good example here of what I was just saying. Okay, you get a doji right here. Nice doji candle. Okay. It's already a downtrending market, right? So you can feel confident on this little small uptrend that it's gonna sell again. Only thing is what? It doesn't sell immediately. And it won't always sell immediately. So there, the example that the candlestick Bible gives you, just because it's for teaching purposes, just like, I mean, in school, they're gonna give you a perfect example, but the market doesn't always flow perfectly, right? But it doesn't mean that whatever, you know what I mean, whatever the trend is saying or whatever the pattern is saying isn't true. So you get a nice doji here, and then it tries to buy again, right? Tries to buy again, tries to sell, doesn't sell, and then it finally sells. And then we finally down here see, boom, it come all the way through, right? Where's another example? Here's another one right here, smaller doji. Okay, smaller doji right here. Smaller doji right there for the sell. It's been in the uptrend. Okay, it's been in the uptrend, and boom, what happens here? Next two candles does not sell, right? Does not sell. But what happens long term? Ends up selling, and then it ends up coming all the way down here, right? So with the technicals, as you'll continue to see, they're really just guidance. I think that's the best way that I can say it. I trade them heavily, but they're best to be used as guidance for, okay, boom, I see this, I understand this candlestick pattern, I understand where the market should be going. Now let me wait for another confluence or another confirmation to know that, okay, it's time to get into the trade, right? As we'll notate later, this zone right in here, and I'll just go ahead and mark it, and we'll learn this later. This zone right in here is a support and resistance zone. So you see here that there's a doji. It's not time to sell yet, but it comes back up to the support and resistance zone. It bounces off of that. So off of this candle, which is also a bearish engulfing, you have a So you have your doji, you have your zone, which is not breaking through, you have a bearish engulfing, you would feel confident right here to get into the sell. Maybe not here, but definitely right here. Okay, and we'll learn more about that as we keep going through the semester. Dragonfly doji, I'll try and cover this one and then maybe one more. And then, like I said, I'll be giving this to y'all so that y'all can kind of look through it. But the Dragonfly doji, this is a buy candle, right? This is the buy candle, and it's usually going to mean that a buy is coming. It's best when seen at the bottom of a downtrend. Okay. What does this candle mean? It means that sellers have usually lost their momentum and buyers are about to come into the market and take over. Okay. So as you see here, if we think about it like a war again, so the sellers, they had all this momentum. They started off really strong and then the buyers came back through and then they knocked them out, took over the candlestick, took over the market. And then we're expecting for the market to buy back up off of this. This is going to be best used again when it's found at a key zone, supply and demand zone, support and resistance zone. It's going to be used best when it gets to one of those zones. And I know I keep talking about those zones and we'll learn about them, I promise, but they're going to be used best when you find them at one of those zones. Okay, so here's their example. Again, like I said, they're going to give perfect examples. The market isn't always perfect, but as you see here, nice downtrend. You find the dragonfly at the bottom of the downtrend, okay, and then long term, it ends up buying up, okay. Let's see if we can't find one. And sometimes it's hard, okay. It's hard to find some of these in the market because they're rare candles. This isn't a perfect dragonfly. This is more of a, yeah, that's not a perfect dragonfly. That's more of a star. So we might not be able to find this one. But again, whenever you're in the markets and you see this one, it's usually going to mean better buys coming. Okay. Next one is the gravestone. It's literally just the inverse of the dragonfly. It means the same thing, just from a bearish side. So in this candlestick pattern, again, we're thinking of it like it's a war. They're fighting. The buyers have good momentum. They start off the candle really strong, right? So this is a 4-hour candle. They open the 4 hours really strong. They buy it up, and then the sellers come through and they knock it all down, and they, you know, they show some resistance. Okay. Again, these two candlestick patterns are really strong. Usually can be used similar to the doji. When you see one, you can usually just expect that a trend reversal is coming. Obviously, you want to match it with some other confirmations, but you can usually expect that a trend reversal is coming. And then here, as we see it in this example, in this illustration, right, you have a really nice long tail, the closing of price action, the opening, and then you see a nice sell. Okay. Something to notate, the longer or the larger the doji, same thing with the bearish engulfing, same thing with the bigger, same thing with the bearish engulfing, same with the way with the bullish engulfing. The bigger the candle, the longer the candle, the longer the tails, the more momentum and the more you can trust it, right? If you were to get, like, for example, boom, you see this doji over here, really small doji. And we just talked about dojis earlier, really small doji. Doesn't mean that a sell isn't coming, right? It actually ends up selling a little bit, but the real momentum isn't until you get here. This small doji, as much as you might want to trust it, as much as you might want to just get into the sell right then, because it's a smaller candle, that might not be the candle to get in off of, right? But then you come here, you see this big long tail gravestone doji, right? That means that whatever zone that the bears have tried to take it to is a sensitive price action zone, and that buyers are, whatever zone that the buyers have taken it to is a sensitive price action zone, and that bulls are willing to, bears are willing to sell it from there. Like, talking crazy today, I'm sorry. But those are the ones that we'll cover today. Next week, we'll go into the morning star pattern. which I was referencing earlier when I was talking about the three candlesticks being next to each other. This is one of those patterns. We'll also talk about the evening star pattern, which is just the reverse of the candlesticks. We'll also talk about trends next week, hopefully. And then I'll start to talk to y'all about support and resistance zone and supply and demand zones, because those are the basis of technical analysis. You can trade support and resistance zones without knowing anything about the candlesticks that match them. Just understanding the candlesticks will help out. So appreciate y'all.
You're the first sector, we see if we haven't found the sector today.
Oh.
Give us a few minutes. Did anybody come on? Oh, I thought stop. Well, you can, yeah, if you want to the first meeting. You still want to see who has an account, who has a Bloomberg account. That's one. It's recording. Let's see if someone's coming in. If they are, get on the machine. So you might introduce yourself, talk about the sector. And if you only have a few people, we can get them one-on-one in a Bloomberg account. Are you here for real estate? Yeah, so there's 4 machines working. This one, the one on the end, and this one on the end. So you want to put on the double springs. You have a Bloomberg account? You have a Bloomberg account yet? Okay. We'll walk you through, or I'll walk you. Do you have a Bloomberg account? Do you have a Bloomberg account? Not for Bloomberg games, not for Bloomberg market concept, but for Bloomberg itself. All right. So, do you know how to set them up on a Bloomberg account?
I don't even know how to set myself up on a Bloomberg account.
Okay, well, we can set, y'all want to do that first?
Yeah, we'll be learning together.
All right, we can set it up. We get logged in. You have to get logged in on this system. Oh, you're already in. Is this you or is this? Oh, so you do have a Bloomberg. This is Bloomberg. So you're set up. Did you just set this up or do you have it? Okay, so yeah, you got a Bloomberg account. All right, so it's good. Everyone. Once you get logged in, we'll get to bar in account. Once you get logged in, well, I don't know. All right, so here it is. Log in with your ABC 123. Yeah, this is actually pretty important to get people comfortable with this time.
This is
A lot of stuff today.
Yeah, this is my first time.
Yeah, if you want to introduce real estate, I'll show you. There's some videos you can watch this week if you have some time.
Gotcha. Cool.
By going and click on the Bloomberg. It's already there. Okay, all right, let's get rid of that part. Jabari operating from here, so let's see if this, so you see how it says, cut it down. And that's the short off of that.
Click forgot login. Then.
Sometimes, you just want to create a new account. Yeah.
And just for anybody who's not certain, we are showing you how to create a login.
All right, yeah, for myself. No. Yeah, just type all your stuff in. Get the phone numbers, you can just give them the same cell phone number.
Oh.
Just give them your same cell phone over and over again.
Oh.
That'll be your life.
Cool.
Do, oh, SMS that too, so. That's the same from- Did you got the photo? Yeah, you said it. Already good.
Oh wow.
Yeah, so something you want to just introduce, what we want to do next week is, use the Russell 3000 and bring all the real estate companies in from Russell 3000. So I can show you how to do that next week. Or if you want to watch the video on how to do it anyway.
Yeah, I would probably. Is that video probably on YouTube or something?
Yeah, I can email it to you. Just email me and I'll send it back. So I probably don't say, but it's, yeah, it's on my YouTube channel.
Gotcha. Okay. Well, then I'll do that. All right. Well, welcome to the real estate sector. Jabari and I'll be teaching y'all a little something hopefully this semester in the real estate sector. This first day, we won't be using the Bloomberg a lot. If you're on the Zoom or whenever this gets posted later and you're watching, you should see how I just logged in on Bloomberg. So whenever you come in and do it on the computers here, you'll be able to see how to log in. And then you can just kind of mimic the steps that I went through to get logged in. As Professor Sweet was just saying, hopefully next week we'll be pulling in all of the real estate companies in the Russell 3000, and then we'll be going through those a little bit as the semester goes on and so on and so forth. Today, I'm just going to give a really good background, hopefully, on the real estate sector, what it is, what it does, what moves the sector, all of that good stuff. Hold on, let me share my screen. Cool. So the first thing I think I'll probably want to go over is just understanding the real estate property types. There's two types of real estate. Well, real estate usually is divided into two specific sections. There's commercial and then there's residential. Residential is kind of simple. Commercial is where it starts to get a little bit more advanced. So if we just look at this, right, boom. Residential is usually going to fall between two types of property types, right? You're going to have single unit living, which is going to be your regular houses. I know this says single apartment, but it's going to be single unit residential housing. And then it's going to be multifamily all the way up to a triplex. So it's everything below a quadruplex. Because once it becomes 4 units, it's qualified as commercial real estate, right? So again, split into two different areas, residential and commercial. In commercial, you have, as you see here, the 4 main, which we're not going to use logistics. So actually I'm just going to tell you. So office is what we're going to consider as commercial, office space, retail space, industrial space, multifamily, everything 4 units and up. Hospitality is also in there. It's not one of the main 4, but it's also in there. Land, but that's everything in real estate. I think that's those are the main ones, right? Oh, and then mixed use facilities, okay? But we're not really gonna hopefully do see a whole lot with mixed use facilities, but those are the main property types to consider when you're thinking about commercial, okay? Next, I wanted to look at, I'm not on my computer, so I don't have the document that I wanted to look at, but let me see if I can find it online. Next, I kind of wanted to look at how the different property types have been performing just recently, specifically office space, multifamily, the commercial property types, just to kind of show how the market is driven, what drives the market, things of that sort. I also wanted to talk about government regulation in the real estate market, so you can get a really good background and understanding of how government regulation works. It differs a whole lot depending on location. So there is no set generic government code of how real estate works. It's kind of based off of state, city, sometimes even county legislation and bills that have been passed regulating it. So that's kind of how regulation will work, but we'll look more deeply into that as we keep going along. Let me look up. Really beneficial because I'm actually covering this in one of the papers that I'm writing for Professor Sweet's class. So I kind of already have this data all pulled up for the real estate sector. But again, it's on my computer, so it might not be on here. All right. Okay, so this is just looking at office retail. At the office spaces. Okay, and as you'll see, hopefully I'll be able to find the other documents. Office space has suffered the absolute most recently, especially with the coronavirus. But office space is also one of the most higher risk property types in real estate. Multifamily is and residential are gonna be your least risky investments or things to consider in real estate. Property types to consider because somebody's always gonna need a place to stay, right? Industrial is another less risky property type, right? Because even if people do shift to online shopping or they work from home or anything like that, things that are manufactured and stuff like that, they're still going to need warehouses. They're still going to need industrial buildings to house these things in. So industrial is another safe space. Where things get kind of risky is in office space and in retail spaces. And then as we see here with office vacancy rates just in 2020, from the second quarter of 2019 to the first quarter of 2021, and these are actually still rising as of right now. And this is now the third quarter of 2021. You see that office vacancy rates have continued to rise. Office vacancy rates, office space is one of the only spaces, actually, office and retail, that have now formed or found a threat of substitution in the market. Multifamily and industrial doesn't really have a threat. Real estate in general doesn't really have a threat. You'll always need a place to stay. We're always going to need a roof over our heads. We're not going to just start kind of being in the air or being outside with no building. So real estate in general is usually a pretty safe asset class. Obviously, we had the real estate crash in 2008, but we're not going to talk about that right now. But in general, there's no real substitution threats when you're thinking about real estate until you get to office space, especially recently with the coronavirus, because now the threat of substitution is remote working, right? Everybody wants to work from home. Even with, as we saw with school, everybody was at home for school. So vacancy rates have continued to climb. It's similar in the retail market. The only difference is instead of everybody working from home, everybody's shopping online. So instead of going in person, people have realized that they don't have to go to the Nike store to try on the shoes. They can just kind of trust that an 11.5 is an 11.5, whether it be online or in person, and they order the shoes online and they get them shipped. So as you see here, like I said, office vacancy rates have continued to climb. This data is just taken from Statista. Let's see if we can't find vacancies. This is retail vacancy rates. This is just to the second quarter of 2020, which is kind of skewed. So I won't necessarily ask you to completely hold on to this because the second quarter is kind of when COVID was hitting. So that's kind of skewed data, especially since it hasn't accounted for the slight rebound that it's made. But this is still something to consider. And the big point being that we've seen in the real estate market something that we kind of haven't seen before, and that is now a real threat of substitution for two property types. Okay. Something else to notate, the hospitality industry has also suffered recently. Obviously, everything suffered because of COVID. Industrial being the only property type and multifamily, as I said before, that have not suffered. But hospitality industry has suffered too because now people are kind of realizing that, I don't necessarily need to go out and splurge or spend, and I just won't travel as much, or I won't go to Disney, or I won't stay in the Marriott, or whatever the case may be. I might stay with family, so those are also things to consider. Airbnb is something else, and Airbnb is actually going to be classified usually under residential. So again, those property types are your consistent, safe ones, not as risky, and have not suffered as much recently. Next, and this was just a kind of overview of just how we've seen the vacancies and stuff recently. I kind of wanted to talk about government regulation. So we're going to go into So we're just going to look at okay, boom. And this is actually one of the articles that I use for my paper, so this is perfect. So there's three main types of leases that we'll look at. The main two, though, are the first two that we'll see. There's the gross lease and the net lease, okay? And then the modified gross and the modified net. But those are kind of self-explanatory based on the name, and you'll see that as we keep going through this. The reason why I want to kind of look at this is because this kind of explains how the real estate market and the real estate industry, kind of how you make your money in real estate, right? How everything works, the financing, everything, how it works in real estate. Okay. So we're gonna go over the gross lease first. The big thing to take away from the gross lease is that it's the best lease for the tenant. That's the best way to explain it. It's the best lease for the tenant. It leaves the property owner on the hook for just about everything because everything is factored into the rent. Okay, so as you'll see here, all the operating expenses are factored in, whether that be property taxes, utilities, maintenance, all of that is factored into the tenant's rent. Okay, so usually in this, you're going to see a lot higher rents just because you have to account for everything else. But it's still, from a tenant perspective, it's probably the best. It's usually going to be the better option, just because, let's say the building catches on fire and burns down, right? Everything inside is covered for them, including their property, right? It's covered for them under the insurance, and the landlord or the property owner has to cover all of that. Okay. This is also ideal for the tenant because when you get down to the small utility bills, the small necessities of keeping up with a property. So when you're thinking about air conditioning, when you're thinking about electricity costs, as those fluctuate, the tenant's rent stays the same. Okay. So let's say that, in the summertime when it's hotter outside, the AC bill is going to be a whole lot, or the electricity bill is going to be a whole lot higher. The tenant's rent stays the same. Okay. So they don't have to adjust for those fluctuations. Okay. Also, make this an example. Yeah. Okay. So boom. So those are the main things to take away from this. It's just that this is usually going to be the best lease type for the tenant. Okay, going into the net lease. The net lease is broken down into 3 different variations. There's a single net, double net, triple net, and then there's technically a 4th, which is the absolute triple net. But again, as you kind of understand what triple net is, absolute triple net is kind of self-explanatory. So these are going to be better for the landlord. Okay, it's going to usually do the opposite of what the gross lease does. So a single net is just where it's self-explanatory. It's where the tenant covers one of the additional expenses in addition to their rent. So usually it's going to be property tax, right? So they're going to cover their rent and then whatever the taxes are on the property. And then the landlord covers all of the other expenses, right? Double net, you're adding on something, right? So the tenant is going to cover usually insurance and property tax in addition to their rent. And then with the triple net, the tenant is going to cover property taxes, insurance, and then whatever the extra maintenance and stuff like that is.
I'm curious then, what, all right, so I had to buy my mom's house, so that's more money. But her property taxes are a lot lower than mine.
Really?
So is it possible to do a single net where I can take advantage of her base?
Yeah, you could. It's just, yeah, you could. It's just, it depends on what the whoever the landlord or whoever negotiated the lease agreement.
Well, it's between me and my mom, so
Oh well, yeah.
she doesn't care.
Oh well, yeah, you could. It's up to you then.
She has more risk, but
Yeah.
I don't want to pay 12,000 in property taxes, I can pay 7.
Yeah, it's up to you then.
So it's just something you need to define. I say she's got to pay property tax.
Yeah. It's that's.
I had to get a lawyer to do that, or is that?
Yeah.
I just do it.
Yeah, you have to get a real estate lawyer to do it. But it's just like it's a contract. So a lease is just a contract. So And that's a good way to understand all of these leases. They're just contracts, right?
So the Travis County Tax Authority, the contract that says the single net is responsible for property tax. They're going to convert these. Wow, okay.
Yeah. And then she'll be responsible for paying the property
And also
taxes.
pay for-
But as far as Travis County is concerned, it'll be, it'll be on her.
Reduce the rents. Okay. Oh, sorry.
No, you're good, yeah. But that brought up a good point. So when thinking about leases, they're just contracts, right? So they're based off of the agreement between the both parties, so the landlord and the tenant, okay? As you get up, obviously the triple net lease, double net, the more that the tenant is on the hook, the less that the landlord has to come out of or has to be responsible for it. They kind of just get paid and sit back and go from there. So as you look at the triple net, you'll see that the tenant is on the hook for taxes, insurance, common area maintenance, and then the absolute triple net is just where they're on the hook for everything associated with the property. Rent, insurance, anything that you can think of. And if a catastrophe or something like that happens, they're still on the hook for that, right? So yeah, so those are the things to consider when thinking about the different lease agreements. Why is this important? Because this is how leases are how funding and how real estate works, right? So leasing is how people decide or how you go about making your money and deciding who's on the hook for what in the real estate market. Modified leases, they're just going to be basically slight alterations to the lease to benefit certain parties, right? So if you let's think about student housing, for example, or just how most apartment complexes are set up, for example, right? You'll have to pay your rent, right? But then you also have to pay like your utilities and stuff like that, right? But the apartment complex, there still might be certain things that the apartment complex covers, right? So the apartment complex might have general insurance over the property, right? And then you might have to just pick up and get your own personal renter's insurance, which covers your personal property. But even in spite of your personal property, if the house were to burn down, the apartment complex still has you covered, right? So those are things to consider. There are slight modifications made here and there to the leases, whether it be gross lease, whether it be net lease, that maybe can find a good middle ground for the two parties. So if we were looking at a triple net lease, instead of maybe having an absolute triple net where the tenant is on the hook for any and everything that happens with the property, you might modify it to where maybe the tenant covers the taxes. Maybe they have to pick up their own insurance, right? But you also have insurance covering them, right? So maybe they have to pick up insurance just to cover their piece of whatever they have inside of the property, right? Their own personal belongings, but they might not have to pick up insurance to cover the entire property as a whole. So those are the modifications that can be made in the when thinking about leasing and things of that sort. So now we're going to try to look at government regulations. I don't get to see the one I'm looking for. Let's see. Before it even loads, the big thing to remember or the big thing to think about, I think this is it. Yeah, this is it. Okay. The big thing to think about just when thinking about laws and regulations, as I said before, there is no set one way of necessarily doing things in real estate. It's kind of weird. There's general things that have to be addressed, right? But it's not something that's regulated from the U.S. government, right? There's not very many federal laws that just regulate everything, okay? A lot of laws are going to be specific to the state. sometimes the city, sometimes the county, specific jurisdictions like that. But rarely is there very much just general federal law when it comes to real estate. There's things that have to be covered, and we'll see that here, but there usually isn't one set general code. So landlord-tenant laws, this basically just gets down to the things that we were just talking about in lease agreements. This basically just gets down to what needs to be addressed in the lease, right? So the payment of rental fees, right? Taxation, rights of privacy, necessary disclosures, duration of tenancy. These are all things that you see in a lease contract, in a lease agreement, right? That's why I wanted to talk about those first, so that you can kind of understand the different lease agreements before we talked about the laws behind them, right? Basically, as you'll see here, basically these laws exist between the property owner and the individual to craft out and to designate a clear definition of the relationship and who's responsible for what, right? For example, in some jurisdictions, in some cities, in some states, a triple net might have to cover certain things that it might not have to cover in another city or another state. Or the landlord might have a little bit more freedom to work in certain different things into the lease that he doesn't have the freedom to do in other states. Okay. So the big thing to understand though, like I said before, is that these are all subject to location, right? Location is huge when we're talking about any laws dealing with real estate. So these are all subject to location, but these are usually the things that are addressed in the laws governing lease agreements. So let's see if we can pull up, actually, we're running out of time. So I'm gonna run through these real quick, and then after that, we'll see if we can't pull up the Texas code for disclosures for landlord and tenant laws and all the other stuff that we're gonna talk about in here, right? So next is disclosure laws. These deal with the condition, location, and restrictions placed on a property itself. This is basically just so that renters and the tenants understand what they're getting into, right? So this is just think about, when you think about disclosure laws, think about necessary disclosures. So think about if we're in this building right now and there's termites or there's an infestation or there's asbestos or something like that, right? These are things that have to be told to the tenant, right? The tenant has to be told if there was a fire in the building 5 years ago, but they went in and kind of tried to rebuild the building. The tenant has to be told if they're in a flooding zone where it floods really bad. You know what I mean? These are things that have to be disclosed to the tenant so that the tenant is sure and that they know about what they're signing up for before they get into the lease. And, you know, it's 2 months in and it rains a little bit and their whole bottom floor of their building is flooded out. Or before they're a couple months in and they have a really bad roach infestation or something like that. Or asbestos has come or something like that and they accidentally knock a wall down and now people are sick and dying. So, you know, these are things that have to be disclosed. These are things that have to be covered. This is why disclosure laws are important, okay? And then hopefully we'll be able to pull up these different laws. I know firsthand that this is something that is different from where I'm from, Jackson, Mississippi, versus here in Texas. My family's in real estate in both places, and just having to deal with the difference in owning property in both places and selling property and stuff like that is different. So hopefully we'll be able to pull up kind of what the Texas code is for this and go from there. Zoning and land use, simply put, this is where things are, the area is zoned off for specific use usually, and you can't, how do I put it? Okay, so simply put, the area, the area is zoned for specific use. So let's say you have a property, commercial, residential, doesn't matter, right? And let's say that in that zone, they're saying that you can't have any properties or any buildings that are over 30 feet tall or that have more than 5 stories, right? Zoning requirements regulate what types of buildings can be in there. Sometimes they regulate what types of companies can be in the zone, right? It's basically just dictating what the property can be used for within that zone. Okay, you'll see this a lot of times in areas like downtown. You'll see this a lot of times in areas where there's new growth potential, right? There's new construction in these areas because they want to kind of regulate who can and who can't be there, right? There's a long process to go through sometimes to get the property rezoned, and all rezoning is changing it, changing how the zone that it's classified in so that you can maybe build whatever you want to on that property. Yeah. And like I said before, state legislation often dictates the zones. So this is a perfect example of something that will not be federal. Because when you get down to zones, you can have maybe 10, 15, 20, 30, 40, 50 zones in a city. And, the federal law isn't gonna, they're not gonna address that for however many cities there are across the country. That's just, that's too much. Versus you leave that for the state legislation, you leave that for the city legislation, you leave that for counties. Those are the people that you leave that for. Next, we're going to get into contract law. This just addresses lease and rental agreements. This is just acknowledging that they're binding contracts drafted by one party or the other and accepted by both. And then it just, it basically just states that just like any other contract, they just have to be specifically worded, specifically organized, specifically constructed, so that in the chance or in the event that you have to go to court or anything behind them or anything that's happened in the course of the lease, that they can kind of stand up to whatever happens at court and be really clear about that. And then finally, insurance laws. This is basically just saying what needs to be covered, what needs to be insured, what type of insurance you have to either rent a property, own a property, etc. And this is just making sure that everybody is covered. The way that I equate this is just like how you're required to have car insurance now. You weren't necessarily required to have it, 50 years ago? You weren't required to have car insurance. Yeah, so it's just the government basically regulating that you cover yourself. That's the best way I can kind of equate it. So these are the main things to think about when considering laws. One extra thing that I did want to add in addition to zoning is deed restrictions. Deed restrictions oftentimes, even more than zoning, can limit what can happen on the property, right? And deed restrictions often can limit competition in the area a lot more than zoning can. Zoning is usually in place to limit competition, to limit, you having 4 Whataburgers in the same parking lot, or something like that, or maybe if there's only one type of apartment style homes in the area, so that somebody doesn't come in and build this really nice 40-story Class A apartment building. Like it's to limit that type of stuff from happening, to keep down on competition. Deed restriction, however, also referred to as a restrictive covenant, limits what can happen on the specific property in a way that zoning can't. So zoning covers the entire zone. That applies to everybody. Deed restrictions, though, anybody who owns the title to that deed, who owns the deed, who's on the title for the deed, who owns the property, they have to follow suit of whatever the deed restriction is. So somebody could have put a restriction on the deed 30 years ago, and you might own the property today, and you might still have to abide by that. So an example of a deed restriction might be that the property can never be used for retail space. And then 30 years from now, somebody wants to come in and put a mall there, that property can't be used for retail space. So they can buy the property, they can own the property, they can hold the property, but it can't be used for retail space. So they can't put a mall there, they can't put utilities there, they can't put anything like that there, right? Anything that's retail, right? There used to be, way back in the old days, there used to be deed restrictions that restricted who you could and could not sell the property to. But obviously, there have been laws that have killed, things of that sort, thank God. But those are examples of what deed restrictions do and what they prohibit. So that's kind of just a brief intro into the industry. I think I only got 3 minutes left, so I didn't want to necessarily just.
First of all, how do you guys file everything on your personal computer at home? Do you just save everything to the desktop? What is your filing system? So you just save everything to downloads?
I try to be descriptive with the name, but I probably should have a better organization.
What about you, Brian? What do you do?
Sometimes I use Excel, sometimes I use cloud.
Gotcha. My junior year, I started getting so many files saved up in my downloads and my documents that it was just impossible to navigate. I had like 300 or 400 files trying to go through every time trying to find something. So I Googled personal computers, systems, and I read a few different ways. And the one that I came up with is the alphabetical system. I just made 26 folders, A, B, C, D, E, F, and G. And whatever it is, whether it's microeconomics or, I put it in that folder. And so that whenever I need something, I can go to that letter. And if you get that started now, you could probably save yourself some of the pain that I had having to redo that system in the middle of a semester. So just an idea for you. So, Tiffany, do you have any prior experience with Excel?
Yes, I do.
Was that from high school or a job? What have you used it for?
Partly from a job, but in high school prior, I did take a course where it was just all the certifications for Office 365, and I got certifications in like every single one of them.
Nice. So you've already got Excel certifications?
Yes, but I don't know how much it really stands right now.
Gotcha. Well, that's good. That's a good start. I see Dalton and Brandon. Welcome in. Sorry it took me so long to get you guys through the waiting room there. You having a good day, both of you?
Yeah, I'm doing pretty good, and that's all right. I'm here now, so that's all that matters.
Very good. What year are you, Brandon?
I'm in my 3rd year. I'm an accounting major, actually, so I felt like this class would be very valuable to me.
Very cool. Glad to have you. What about you, Dalton? No worries. All right, well, let's start doing a few Excel things here. And if anybody has any questions, am I going too fast at all, or you want to clarify, or you want to correct me on anything, do not hesitate to speak up, and, you know, don't let me leave you confused or anything. Feel free to ask questions. I'll definitely be happy to answer. Let's just start with some simple file stuff, typing in numbers, fonts, alignments, borders, stuff like that, okay? So if we just type in some numbers and we want to go to our next tab here, enter is going to bring us down. And if we want to go to the right, that tab is going to bring you to the right there. So when enter is down when you're entering data, tab will bring you to the right when you're entering data. So for this number here, this 8787, there's a lot of different ways that we can go about manipulating what we want here. We could have it as a currency, we could have it as a number, we could have it as a percent. So in order to do that, you click on that, you bring down this number tab here. If we want it just quickly to be in currencies, real easy. If we want it to be in percentages, and then these numbers right here are what's going to allow you to move your percentages and your decimal points out. Now, if a number is too big for a column and you get those number signs there, you can see how when I go in between these columns here, it kind of makes that cross. If you double click on that cross, that's going to auto fit all your columns for you. So you can drag it big or small, but if it's too small and you don't want to, you just double click right there, your columns are auto adjusted. That's, you know, definitely comes in handy when you got a big spreadsheet, a bunch of columns, and you can just quickly double click on everything and everything's going to be in perfect format for you. Let's see. When you're typing letters, and you can change fonts. You can do everything you basically can in Word pretty easily. So if you want to change the actual type text, you double click on it and then you can get in here and actually highlight stuff. If you want to just do things to the cell, all you got to do is click on it once. You can't exactly change the numbers. So yeah, highlighting it and clicking on the cell do two different things. So keep that in mind when you're trying to type things in. Again, we can auto fit this column to fit the whole welcome to class. Putting borders around things, if you want to make a border, it's this box here. All you would have to do is, if you want to put a thick border around where we're doing here, you can do that. If you want to put columns on the inside, you can click this all borders here. Makes it look a little snazzy and professional. If you want to make something centered atop of your chart here, this merge and center, you just click on whichever one you want to do, and this merge and center button is going to, you got to highlight both rows where you want to merge and center it, and that's going to nice and get you square up above there. Yes.
Which one did you choose for the border again? Can you show me?
Yes, right here. See that?
Yes. Just click on it.
It says all borders. If you click on that little dot to the right of it, that's going to bring this scroll bar down. And you'll be able to see all borders. If you want just a border on the right, border on the left. If you want to draw your own border, just tons and tons of options there. So that's going to definitely help you get things looking snazzy and professional. Yes. Let's see. There's some cool functions here in Excel. If I want today's date, this equal sign is how you enter formulas. So anytime you wanted to do a calculation, anytime you want to be able to reference something, that equal sign is going to be one of your best friends. So if I just type equal sign, date, let's see. Let's do equal sign today. It's going to automatically populate the dates for you. So you don't ever have to remember that type of stuff, which is pretty cool. And there's definitely some other functions you can do. If you do, I believe now, that's also going to give you the date. You should be able to type date and time. Actually, I'll show you real quickly. When you start typing after the equal sign, stuff will automatically populate. So if I just do n, it shows me all the functions that I can be doing with n right here. So if I do date, if I just do D, I can double click on the date right here and it's automatically going to fill for me. See that date right there? So that's a good little trick right there. If you're ever looking for functions, you know, there's thousands of functions you can do. So if you just type P, here's all the P functions, percentiles, and then all you have to do is double click on it or click on it and hit tab, and that will be the same thing. Any questions so far about anything? All right, so there's really 3, sometimes 4 ways to do everything on Excel. Actually, I'll have to email some of these cheat sheets to you guys later on. So you can pretty much operate Excel without using the keyboard at all if you want to, just by using, not without using the mouse, I'm sorry, just by using the keyboard. And I will email you guys one of the cheat sheets that I just sent out in class. There's also all your toolbars up here where you can do everything. So if you want to clear something, you can do that. You can also right click. Right click pretty much gives you that same clear contents that you see that I just clicked on. You can clear contents here, or you can clear contents here. Using the toolbar up top usually does give you a couple more options, but you can definitely still do everything by right clicking on almost everything. It gives you many of the same options. Also, I've got this data sheet over here. If I just highlight any random row or number of these, you can see down here on the very bottom, it gives you some good counts and averages. So if I want to know how many columns I just highlighted, 39, I don't have to go and physically count them up. It tells me right here on the bottom. The average of all those columns I just highlighted is 3.74%, and it sums up to 145.72%. And no matter where I highlight or click, it's going to give me the count, the sum, the average. And if I right click on here down by the bottom, I can customize what it wants me to show me. I can do count, average, page number. I can totally customize whatever I want it to show me on the bottom. So that's a really cool feature there. So you can see what we have open here is called a workbook. And inside this workbook, we have worksheets. These worksheets are the ones that I'm clicking on here. So that's good terminology if you're trying to tell your teacher in class, no, go to the next page. They're not going to know what that means. But if you tell them, go to the next sheet, they're going to know exactly what that means. So start getting familiar with some of the words there. I don't use this feature as much as I should, but it's a really cool one, I think. If I were to highlight the bottom of these cells here, this box that you see here on the bottom is an auto sum, auto everything box. It's a little cheat box. So if you highlight any data columns and then click on this, that's going to tell you formatting charts, totals, tables, and spark lines. So I'm going to click on this totals right here. If I want the sum of those columns to be at the bottom, there you go. I can click on sum. If I want the average, I can click on average. If I just want to know how many things I just selected, there's count. And if I want them to be on the other side, you can see how that shows up on the right there instead of on the bottom. So that's a quick way to get some, if you just want to know your totals, your averages real quickly, that little box there on the bottom gives you a good way. Also, this chart here, if I want to make a quick chart out of all this data, I got some good different options I can use to just pull in a quick chart, and then I've got all this data real quickly. For a little bit cleaner chart, I'm going to highlight these bottom 3 rows, click on this, charts, there you go. You got your positives and negatives, and then you can fill in your chart titles and axes later. We'll go over that, I believe, on the 3rd week of class, because charts and graphs are one of my favorite things in Excel. Let's see. Anybody have any questions so far? So if we want to,
I got one. Does like average, count, and sum, does that always pop up at the bottom, or it's only if you select those options?
it's only if I select it. You can see I've got average selected. If I unselect it, the average goes away right here.
Okay, so like whenever you open up a new worksheet and you highlight a list of numbers, average won't always pop up at the bottom, so to say.
I believe if you have it set, these settings should be for every workbook. So if it should be pretty uniform. If you have it set when you open up new ones, it'll be on there. I can add maximum, I can add minimum. So I can add and take away as many things as I want. So here with these 3 highlighted rows, the maximum is 14.2. Let's go find that real quick. There's 14.2, that's the maximum. Oh, I unhighlighted it, so they went away. But if I highlight this again, we can see the minimum is negative 24.4. If we go try to find that real quick, there it is, negative 24.4. So if I want to, if your boss tells you what's the highest and the lowest in all of these, 300 things that I just highlighted, I can tell you the maximum's 32.5 and the minimum's negative 44.49%, like that. I don't have to go looking for it. And by adding and subtracting these things, you can get different things real quickly in there.
Okay.
Does that answer your question?
Yeah, it does. I appreciate it.
Yes, sir. All right. So if you want to add new worksheets to a workbook, see this little plus sign right here? You can press that all day long. And wherever your cursor is, it's where it's going to enter it. So we were on the formatting tab, and that's why it's entering sheets in the formatting tab. If I delete these sheets that I just added real quick, and I go over here to click on VLOOKUP and then add them, it's going to add them after the VLOOKUP there. If I want to change the name of those ones I just added, you right click on that sheet there, and you just hit rename, or you can double click and it will highlight and automatically let you rename it there instead of right click. So double click or right click. Like I said, there's many different ways to do things in Excel. It's all about finding the fastest and whichever the best one works for you. So we can rename this welcome sheet or however we want to rename it. Just click out of it and we're good. If you want to move this sheet around, you click on it and you can just drag it wherever you want to. And that will move it to the middle of the workbook there. We'll move it back to where we had it. If you want to change, if you're working with a bunch of worksheets and you've got 4 worksheets for Brad and 4 worksheets for Brian, and you maybe want to color code it, you can right click on these work tabs, color, and then do Brian's blue and do Chad's orange, or however you want to do it. That's another good way to differentiate some of your worksheets and not get confused about anything. Let's see. Sometimes when you open a workbook, you won't be able to see all of these worksheets because this scroll bar is way over here and it's covering up a lot of your names. If you see these little 3 dots right here, if you get that little crosshair on there, you can adjust this scroll bar and allow yourself to see a little bit more of your options there. So that's another trick I didn't learn until a few months ago.
Can you say that one more time?
Yes. See this, these 3 dots right here, this little scroll bar? I'm actually gonna go see if there's anybody in the waiting room real quickly. Nope, I think I got everybody in. Next time I need to remember to take off the waiting room. All right. Okay, so the cool part about Excel, I might be getting a little ahead of myself, but we can group all of these together and make changes to all of these worksheets at once. So this is a little bit more of an advanced thing. But if I right click on any one of these and I click this one right here, select all sheets. And let's see here in M4, I'm just gonna highlight, make a highlight there. And then I go click on any of the other sheets. If we go look at M4 and VLOOKUP, should be highlighted there. Yeah, there we go. I go to sheet 4 at the end, there's M4 highlighted. I go to conditional sums if, there's M4 highlighted. So that grouping tab, I have an internship right now at Aspect Wealth Management. My boss asked me to change the disclosure on the annuity spreadsheet we have. The annuity spreadsheet had 180 tabs in one workbook. And there was an older lady who was working on it, and she had put the disclosure, which was about 10 sentences of fine print, you know, we're not responsible for any losses that you may sustain, in one of the cells. And now you can add a footer or a header in Excel. But if you put this disclosure in one of the cells, you have to change it individually across each one and set it. So my boss told me that she wanted it placed in the footer. So I had to highlight everything, get the disclosure. Because it was such a big disclosure, I had to figure out how to take a picture of it and fit it in there. And then real quickly, I was able to put it in all the sheets. But it was, you know, a challenge, and I had to learn how to adjust all those things. So it's, you know, right away at my job, I was using Excel the first day. Let's see. We can learn some formulas real quickly. Let's go back to our, so to unselect all these sheets, all you got to do is right click, or I guess we're already unselected, but if you just click out of it or right click and select unselect sheets, that'll get you out of there. So we'll go back to our formatting page. Let's see. This is a trick that is a little advanced, and I didn't learn this till Professor Sweet back there taught me. But I'm going to teach you how to navigate around the workbook a little bit. Rather than scroll up and down, you know, if you have 1,000 columns or 1,000 rows, it doesn't make sense for you to sit there and spend 20 seconds scrolling down from the top to the bottom. You know, it's just not practical. So if you can learn what I'm about to teach you now, it will make you look pretty cool in your first Excel class, and it will save you so much time and energy and effort. So if we go to this column A right now, and we want to select this whole column right here, that Control and Shift button are going to be your best friends. And the arrow keys, that Control, Shift, and down, that's in that cheat sheet that I gave you. But if you press Shift and press down, you're going to highlight down from there without pressing Control. If you just press Shift and the down arrow, I'm highlighting that much stuff right there, one at a time. However, if you add that Control button into there and hit Shift, Control, and down, I just selected 141 cells at once, just like that. So that is how you're going to get up and down your spreadsheet real quickly. So if you don't want to highlight everything, all you got to do is press Control and up, and that's going to move you up to the top. So you can try it a few times, hitting control down, control up, that's gonna move you around. If you add that shift in there, that's gonna highlight everything. That control shift, that's gonna highlight everything for you, which is pretty darn cool. How would you highlight all 5 columns at the same time? You would press shift, control down, and right. Give it a try. Real quickly, you can highlight all those things. And if you want to graph, right click, you can hit this little thing right here, do your charts, scatter plot. I've got every single thing that we just highlighted on a graph, 5 seconds. So incredibly powerful tool. And we can see, if these were returns or if these were stocks, we could picture which one of these are in the positive quadrant here and which one of these are in the negative quadrant. And there's so many different types of charts and graphs we can use. So just a backspace will get rid of that chart for you if you want to. So yeah, I don't, as much as possible, try to avoid scrolling up and down. Use those shortcuts to get around the book for you.
Very useful.
Absolutely. I'm still getting used to using them. I still catch myself scrolling up and down. And I'm like, it's okay, it's just 5 more seconds and you'll be there, but I need to get better about it. All right, is everybody having fun so far? Anybody learn anything yet? Let's see. All right, so this is a nifty tool that you can use if you want to practice anything anything that I've taught you. Practicing is tough because it's hard to find a workbook that has a bunch of information in it to work on. And you don't want to sit there and type 1,000, 500, 800 in all these cells in order to be able to work on data. So if you do equals, there's a random number generator. You do equals rand between. So you can do rand and that'll give you numbers in decimal form between 0 and 1. So if I just do that right there, it's going to give me a bunch of decimals. And I can just, so that's another thing to teach you. In order to drag and drop, let's see, I'm going to go back a step. So anytime you want to drag information and get more information in Excel, there's different, so there's a crossbar right here. Look, if you look at my cursor, it's making a cross that it's got little crosses on the end of the cross. If I move the cursor into here, it's a big hollow cross. And then if I move the cursor over here to the corner, you can see it's more of a skinny cross with none of those things on the end. So on the sides, you can see it's got that cross with the weird 3 crosses. That's going to allow you to move your number back and forth, that cross with 3 crosses. This big hollow cross is going to allow you to click on it. And this is the one that most people takes a while to learn. That when you go on the bottom right of a cell, it's going to give you just that plain black cross. If you click on that and drag, that's how you're going to autofill many, many, many things in Excel. There's going to be tons of things where that auto drag right there is going to get you to your answer. And you can either auto drag or actually double click on that cross when you have information next to you, and it'll autofill all the way down to where that information next to you is. So let me show you right here. If I do that random and get that number, and I want this all the way down for these 140 rows right here, all I have to do is get that and double click, and it's going to automatically fill all the way down to the bottom for me, just because I have information in the column to the left. Does that make sense? Anybody have any questions about that? So that just filled all the way. If I hit control down, all the way down to the bottom, I have random numbers that will change anytime I do anything from 0 to 1. And all that does is give you information Also, if you're ever doing a raffle and you need random numbers for someone who wins a contest, that's a good way to generate random numbers. So,
Can you just do it one more time, please?
yeah.
And then, like, how do you make the leaves after you create the language?
So I got that cross here, this black cross, and all I do is double click. And it fills. It'll work?
Yeah.
Good.
I get the white one the whole time, that's why.
Gotcha. All right, so if we don't want decimals and we want random numbers that are a little bit bigger than that, we can do that random, but you double click this between right here. Underneath random, you do random between, and you can either double click it or you can click on it once and hit tab, and that will get you there. Now it's telling you what's the bottom number and what's the top number that you want. So we'll say our bottom number will be 1, and then we do comma. Comma is what separates things in functions in Excel. So we'll do comma, 1,000. So we want numbers between 1 and 1,000 to generate randomly. So our first random number is 867. Yours will be different because they're all random. Again, if I want to fill that down to the bottom, I just double click there. I now have 1,000 random numbers between 1 and 1,000 that go 140 rows, just if I want to have some good information to work with. Make sense? So that's a good way to get information in there. Let's see. All right. Not too much longer, guys. A few more tips and tricks. All right, I'm going to show you how to use the format painter. Let's go to this first tab here, Stevens Hours. So if you want to recreate something, if you want just the formatting from something and you want to move it real quick, this format painter right here allows you to reproduce the formatting that you're using. So I highlighted this, I'm just using this because it's blue and white and a little bit different format than everything. If I highlight that and click format painter, and then if I want to get the same formatting somewhere else, anywhere in the worksheet, just real quickly, it allows me to duplicate anything that was there. If I hit that back button, I can go back. The same thing, if I highlight this, click format painter, and I kind of want to bring it over here. Just real easy to get some of the formatting over. Probably won't use that a whole lot in the beginning, but as you get more advanced, that'll come in handy. Let's see. Let's go through some of these functions up here. So let's go back to formatting. If I want this welcome to class to be shifted left, I can move it to the left of the cell. Shift the right, I can move it to the right of the cell. If I want, for this one right here, this welcome to class, I don't like that it's going outside of my table. So if I want to make it look good in my table, all I got to do is click this button right here, wrap text, and that's going to move it around to where it fits real nicely inside my table right here. So that wrap text button will help you a lot when you get frustrated about how to make things fit into columns. Just click that right there. This, if I want to unmerge this welcome to class right here, all I got to do is go back to my merge and center and do unmerge cells, and it's going to go back to its first place here. Let's see. So if we go back to our random numbers, how do we highlight the whole thing? Someone tell me. There you go. So Control Shift down. And I want this to be number or money instead of just numbers. What do I do from there? You forgot?
Yeah, I know there's a chart that we can click to change.
Well, this.
Hit currency.
Yep, exactly. You go to this number chart right here. You can either click on this little tab in the bottom corner. If you click on this, an even more advanced chart is going to pop up. So like I said, there's multiple ways to do everything. I haven't shown you this way yet. If we want numbers here, here's currency, accounting, scientific method. We got alignment, fonts, borders. You can click on any of these here. If you want alignment or font, this will open up those big boxes for you to start adding stuff to. So if we click here and we want it in currency, click OK. We are now looking like numbers. And if we want to get rid of all those zeros to the right of the decimal, we go back here, click that twice, and we got rid of we're looking like numbers. Now the difference between currency and accounting is mainly just how they look. With those dollar signs right next to the numbers right here, it can make it a little bit easier to read. And accountants like everything as clear as possible. So for this accounting, you're just going to notice that the dollar sign stays over here to the left so that everything looks a little bit cleaner. That's the difference between accounting format and currency format. Whichever one you prefer, I'd say I kind of like the accounting format better just because it keeps it looking a little bit cleaner. If you want everything to be at an angle, that highlighted row right there kind of gives you a little bit different look by pressing, if you want something at vertical or counterclockwise. Let's see. You do use a lot of copy paste in Excel. So if I want to Control C this entire column, you can see that kind of moving green dotted line that goes around your Excel column right there. That lets you know that it's being copied. And if I want to move it over here, a lot of different ways to do it. I can do Control V, which will definitely get it in there. Or if I want it to look a little bit different, or I don't want some values or columns, there's this paste special up here in the top left. And it gives you 7, 10, 14 different ways to paste. You can paste a picture, you can paste values and the source formatting. You can paste only the formatting, a lot of different ways to do it. So if it's not pasting properly, just try a different way. So you can see it shows you, it displays all the different ways it's going to paste just by hovering over these things. All right. Does anybody have any questions or about what Excel can do, or about something you've seen that you're curious about? So if you want to get out of this highlighting right here, it's hard to. If I just click around this, I can't get out of this copy paste, so I'm not sure how to do that. The escape button on the top left is what clears that copying for you. All right. Well, I could definitely keep going, but it's been 45 minutes now. I don't want to bore you guys unless you want me to keep going. I think we can start wrapping up. Anybody still curious? Want me to keep going?
Okay. I'm sorry, I really want to, but I'm so hungry right now.
Oh, no worries. That sounds good. That sounds good. Well, hopefully I sparked your curiosity. We just scratched the surface. But we'll start definitely diving into some more functions, some more charts and graphs, all different types of, eventually we'll get into some complicated statistical type stuff that you're really gonna enjoy. So try to come up with some questions next week about anything you've seen or recall, and that'll do it for us, okay?
Can I ask you about my homework that are related to Excel?
Sure, absolutely.
Thank you.
Yeah, I'll definitely stay around after class. All righty, Tiffany, Brandon, Dalton, thanks for coming.
I have a question. Will, like, in the weeks to come, will we be going over, like, I know you mentioned graphs and charts, but like utilizing pivot tables and I guess analyzing data. Like you said, you're working with big Excel sheets in your internship right now. Will we kind of get some practice with that as well?
Absolutely. We'll definitely get into pivot tables. Pivot tables are a really good thing to know, and we'll definitely use Solver to do some analyzing, amongst other things. Yeah, we'll try to build a forecast, maybe real quickly build a forecast, and we'll get into some good stuff to know. Everything that I'm teaching you is stuff that I learned in my classes. So at some point it will all become relevant again.
Okay, thank you.
Absolutely. All right, any other questions? Sounds good. Thanks for coming, guys.
What we're gonna do is, we'll look at the sections of the exam. And it's not that many topics. So the first thing is discounted cash flows, which is probably almost a third of the exam. So present value, future value, present value of an annuity, future value of an annuity, a bunch of those problems. There's probably 10 of those problems, or 8 to 10 problems. So we'll do quite a few of those. They do some return. So whether it's a CAGR, annual return, holding period of return, arithmetic, average, IRR, those calculations, we'll go through all of those. They also do APYs, we got to know that one. On the present value, future value, you have to be able to do an amortization schedule. So we'll refresh how to do that. You also have to do a bond valuation, which is pretty straightforward calculation. They ask for a yield, that's really simple. So some of these things are pretty simple. They do a lot of on the stock side, the dividend discount model. They do that a few times, and they do some CAPM. And on CAPM, they have some beta examples. Beta, you have to know the formula. They talk about systematic, unsystematic risk. So some basic CAPM kind of things. They do net present value. So remembering how to do that, they have a few problems on that. And so I'll give you a few examples of those. Talk a little bit about correlation, diversification. So, but there's really only 1 or 2 questions on that. Most students don't have trouble with that. There's some very basic economics. What do interest rates do in a recession? What does the Fed do in a recession during a growth time? That kind of thing. And then some things on maximize shareholder value. There's usually a question on that. A little bit of stats, but real simple, very simple stats. So we'll do a couple of questions of that. And then there's some financial ratios, but very basic. And in fact, some of the ones they cover are not ones I think are that important. So when you really look at it, the bulk of the exam is these first few things. So what we want to do is we'll go through these. We can probably get through, 2 or 3 of these a week pretty easily. And especially at the end, we can probably cover several of these at once. So we'll cover them. We'll talk about basically what they're looking for, do some example problems. And then when we do the example problems, there's 3 things, or a few things I want to do. First, we want to write them out in words. So it's just some making sure that we really understand the question. So it's really, really clear what they're asking. Some of this is, you see it in one way in 3013, but they do it differently on the exam. And you already know it, but you just didn't see it in those terms. So it's a way to step back and say, okay, I already know this, but boy, I didn't hear it that way. And so this is an opportunity to, step back and say, what exactly are they asking? Why are they using this jargon? And I notice on the exam, they use a little bit of jargon that is different than how I teach it. Every class is probably a little bit different. Then we want to set it up in Excel. In Excel, we want to do it in detail, full problem. We also want to use the Excel functions. So we'll do it both ways like that. So like an amortization schedule, we can do it setting up the entire amortization schedule. We can also do it using Excel formulas. And then we also want to set it up on the calculator. Now, Beatrice, I don't know how you did it on the exam. Dr. Maynard says you can use a calculator and you can use Excel, and I don't know which way you went.
Yeah, only the calculator.
So with the calculator, we'll do it again in detail, where we enter the formula, and we'll use the calculator formulas. Now, I'm much better at Excel than
Me too.
Because
Me too.
you'll never see the calculator again after you graduate. So if you can use Excel, you might want to make sure you've got the Excel down. They're thinking about on the exam actually changing it so that one or two of the problems have to actually be done written out rather than multiple choice, because they want to make sure students aren't just memorizing the exam questions. So that's the goal. I mean, there's really some practical stuff here that a good refresher. There's nothing on the exam you shouldn't know just real quickly off the top of your head. So my guess, if any student's struggling with the exam, it's not that they don't know the material, it's that the exam does it in a slightly different format than they were taught in 3013. I really think that's the issue. And so our goal is to make sure stuff you already know, you can quickly adapt it when someone else words it a little bit differently. And I've noticed some terms they use on the exam that my students that took my 3013 would have no idea what they're talking about. They talk about the equity multiplier. I don't use that term. I use financial leverage as my term, but it's the exact same term. So my students would have no clue how to answer that question because I never use that term. So it's good for me looking at the exams, so I know, like, okay, there's some different terminology depending on the professors. So you shouldn't feel bad if you had any issue with the exams, because I think that's probably what's happening. So what we'll do next week is I'll get a few more students here, and then we'll focus in on the discounted cash flow ones, the present value, future value. I don't know if that was one that was a struggle in the exam, but there's several of those problems. So I'll give you the formulas. I'll show you them, what they're looking for, and then we'll work a few problems, and then you can see if there's any of those that give you any issues. So that's the goal next week, just because that's a big part of the exam. It's at least a fourth of the exam, so we should expend at least one full class just on that. And then I don't know how fast we'll go after that. Probably get 2 or 3 of them a week after that. So we'll go there. I'll put you down if you're still interested next week. Ben, I don't know how to spell your last name. Cardona?
Cardona, C-A-R-D-O-N-A.
Okay.
C-A-R.
All right, so I've got you down. It's your option. There's no feelings hurt if you decide it doesn't work for you, but this is what we'll do. So if you have the exam coming up, we should, if you really have it coming up and there's one of these topics that you have an issue on, I can move the order around. I just did it in the order on the exam, but there's one of these topics that you say, well, I really got to cover that because I was struggling with that on the exam, if it was the returns or something like that. I don't really care what order I go in, so I'll just leave it up to the students to let me know. But I'm going to work real hard to get 2 or 3 more students in here so we have a decent class. So y'all have people you can talk to as well. So, all right, that's it for today. We'll just get
Sounds good.
Full steam. All right, thanks a lot.
Thank you. Bye-bye.
What we want to do is a few things here. First, we want to learn how to forecast, and I'm leaving my video off, so I don't want to be rude, but we're having some bandwidth issues. Colin, you saw that yesterday, so it seemed to work a lot better if it doesn't have to. it's probably, you know, videoing my face probably breaks any system. So that's probably the key. So, so what we want to do is, first of all, learn how to forecast basically. All right. So I'm going to pick a really simple company with Costco, but we'll talk about harder companies like a Google or Disney that are much more difficult, what you'd have to do. We'll go through the process. Today, I'm going to talk process and then also make sure everybody can get to Capital IQ. So the second thing we want to do is, the last time I did this class, we used Bloomberg, but now we're going to use Capital IQ for a couple of reasons. First, Capital IQ, I think, actually gets you the data a lot faster. On Bloomberg, when you download stuff, you have to do piece by piece by piece. With Capital IQ, you can bring in a bunch of stuff with just one click. So that's kind of nice. The second thing is, I'm seeing Capital IQ a whole lot now. So it's becoming a more common software. And so because of that, we want to get exposure to Capital IQ. But the third reason is I really don't know Capital IQ. So I'm hoping in this process, we might be able to teach ourselves how to use Capital IQ better. So I'm hoping some of y'all might want to try this, to go out to YouTube and Google and see if there's some good Capital IQ training videos. And if you find something that'd be helpful, bring it back to the class, you know, experiment around. I'll try to do the same thing. I've talked to the librarian and she says there's a lot of things we can do, on Capital IQ that we can do with Bloomberg if we just figure it out. One thing I love about Bloomberg is bringing, just like what you're doing right now, Nicholas, is, you know, bringing 500 companies in and bringing all this data and getting the industry data. Well, the librarian told me, Natasha told me, you can do something like that similarly on Capital IQ. So we'll just see. We might find that Capital IQ does everything we need that Bloomberg does, and we can save all that money we're spending on Bloomberg. We'll see. So that's our goal. I don't know how many of y'all have used Capital IQ. Why don't we start with, let's start number one, which is access to Capital IQ. Let's do that first. So what you want to do is go into the UTSA library. So everybody try this. Let's make sure we can all get in that and go into My UTSA. And then you should be able to find the library homepage. All right. So all of y'all let me know when you have that. Daniel and Hector. Let's go to the library homepage. And Cameron, you on? Yeah. You got it. And Nicholas and Sergio, you can catch it here. Yeah. And then go to databases and just click on the C. Since it's cap, it's going to be up near the top. And there it is, Capital IQ. Now, my experience is it doesn't work the first time, so it takes a couple of tricks. It's like Capital IQ. So the whole thing is geared off of your UTSA ID, the ABC 123. So you have to go through that. So I'm going to click on Capital IQ, and y'all try that and see what happens. So I'm going to, you have to put in your ABC 123 and then your normal password. Mine's a Tolstoy novel now, so I can never get it right. I think I typed it wrong again. Yeah. Boy, I cannot type my password anymore. Make sure your caps locks are off. Yeah, I'm having.
In my case, I had to put the whole email.
So it's the email. That's probably wrong.
Maybe you need
And it has to be your UTSA. So yeah, I can't remember.
your
So it's
UTSA email. Mm-hmm.
Sorry about that. And I don't remember, boy, I should have tried this. I did this yesterday and had no trouble. But okay, let me try it again. All right, I had the wrong. Okay, so you got to set up your own password. Sorry about that. Boy, I tried this session, no problem, and I've forgotten how to do it. So you have to put in your UTSA ID. If you've never done it before, you'll have to create your password. So how many are having still struggling to get in. Nicholas, are you in? You're not in? All right, so keep trying to create an account, create a password. You've got to use your .edu account, UTSA.edu. Has anyone gotten this far? Colin,
Yes, I have. I'm in.
Daniel, you're not having luck? Are you
I'm
still
just having
on
to
the
reset
login?
my password.
You're still on the login page?
Yeah, I don't know. Should I put the unlock your account?
Well, it might be your lock because you tried a few times. So, all right. So let me just show you how to do it. And this week, y'all work on that. If you're having trouble, you might even email the library and just say, how do I do this? Because it is a little tricky. But once you get in, what you got to do is we're going to click on companies. And we're going to do Costco, and you just type Costco. So you'll see how this works when we get in there. You're looking for Costco. And we want that very first one. You have to be careful because there's also a Costco in Europe, in China too. I think there's a few other Costcos, but we're looking for the one, this very top one. And when you click on that, it brings up all kinds of stuff. So we might come back to this, or maybe some stuff we can use here. I'm going to click on the income statement. And I'm going to take this bar up here, and on the years, I'm going to slide it as far back as I can. I want as many years as I can get. I don't know how much further it will go. Yeah, it's so, but the key is up here. You see this button right here, it says download financials. That's what we want to do. So you have download this page. I want everything. So that's kind of the nice thing they have when you do the download financials. It brings in everything: balance sheet, income statement, segments, all that kind of stuff. So that's your goal this week, is get in the Capital IQ. You may have to experiment some with it, Daniel, until it works. That's what I had to do. If you forgot your password, maybe they give you 3 tries and then you have to stay up for a day for it to work. But so this is your goal. Try to bring Costco in. If you can't get this to work, I'll save this file and I'll put it out on a Google Doc somewhere. I'll set that up this week so I have it. Put your if you're on Zoom, put your email in the Zoom, and then I'll have that on the Zoom chat. So just type your email in the chat. And those that are here, just email me that you're in the class. You can email me or put it in the chat. Either way would be work. So if you look at it with Costco, they bring up key statistics. We probably won't use much of that, although the same store sales is pretty important. We may look at that. We have the income statement. That's going to be important. One thing, and we'll talk about this with Costco, is how we're going to break up the revenue. That's a really key issue. Balance sheet is going to be important. Cash flow is going to be important. We don't really need the multiples because we're not doing valuation here. Capitalization, there's some stuff in here that I thought was interesting. Capital structure, some of that might be interesting. Some of the ratios we might use, who knows. Supplemental, some of this stuff I noticed was pretty important. Trying to find, well, I think it's the next one, industry specific. Yeah, so the industry specific, that's where we get store data, how many stores. When did they start reporting that? So they didn't start reporting that until 1998. But the store data is going to be really, really important. Stores open, stores acquired, stores closed. All of that data is going to be really, really important to us. Square feet, let's see if they give us square feet. I'm not sure square feet's as important with Costco, because yeah, they only give you one number. Their stores are pretty generic. They all look pretty much the same. So I'm not sure square foot's important. For Walmart, square feet was really important. For Target, because they have, super Walmarts, super Targets. For Costco, I haven't noticed Costco's being different sizes really. So they're all about the same. So we're really going to be working on a per store basis. We don't care about the pension all that much. Segments can be important. And I think the membership fees is going to be really critical for us, that we break out the membership from the retail. And if they have any other things that they do, Costco's doing some interesting things. So what we want to do is figure out what we need and maybe try to get all that on one page. The stuff we're going to use, get it all on one page so we can use it, so we're not going all over the place. But anyway, your goal is Capital IQ is to get this. So how many of y'all have Costco up and running now? Cameron, you get it to work? Nicholas, you figured it out? You're good? Okay. Colin and Beatrice. So Daniel, you're still trying to get in there. So Kevin and Hector, I don't know if y'all are able to get Bloomberg to work, but I mean, Capital IQ to work. But anyway, that's what I work with. I'll save this file and we'll be working from this file. What we'll do is we'll add some pages where we'll bring in what we're going to forecast. So let me talk about the forecasting process here. So the key with forecasting is first we need some history. And we'll get the history, that's going to come from Capital IQ. And then the single most important part of forecasting. So those in my security analysis class, 50% of your forecasting paper is the revenue forecast. If your revenue forecast is bad, your forecast is horrible. If your revenue forecast is decent, you probably have a decent forecast. Even if you have an error somewhere, those errors tend not to be that material. But if your revenue is off, your forecast is way off. We'll come back to this on revenue forecast because that's really where we got it. We got to make sure we're correct on that. Then what we're going to do is finish the income statement, looking at history, which for Costco is going to be so easy. Costco has the most stable margins, not only gross margins, they have the most stable net margins. So if you know their revenue, their net income is 3% of revenue. It's so easy. So we're going to see it's one of the easiest firms. That's partly why I picked Costco. It's an easy firm, their forecast. All right. So those are my security analysis class. If you want to bring in your company that you're in the class and try to follow me in your company while we do it at Costco, you could certainly try that. And you can bring up questions. So with Costco, it's going to be stores and it's going to be membership fees. But your company's, well, you're doing semiconductors, right? Yours is.
Well, mine's Abbott.
Oh, Abbott. Yeah, yours is. Yeah, it's going to be. So we're going to talk about that. The revenue forecast is all about the drivers. And there's 3 different ways we can do it. And we'll talk about those 3 different approaches. But it's what drives revenues. And you got to get that down. After we finish the income statement, we're going to then do the balance sheet. On the balance sheet, we're going to have income statement. Driven accounts, those will be real simple, like accounts receivable will be a percentage of revenues, inventories will be a percentage of cost of goods sold, accounts payable will probably be a percentage of cost of goods sold. Now I'll do just like I did last year when I did the Facebook, is we'll just run real simple regressions and we'll see, hey, accounts payable is more correlated to cost of goods sold or the selling administrative expenses. We'll just look at the correlation, see what gives us the best correlation, and we'll use that. So it's real simple types of things we can do. And then the other items, I'll give you the sweet trick, how I do the rest of the balance sheet. I had my own consulting business for a while, and this firm hired me to build a forecast model for a property casualty company. And it always bothered me how we did balance sheets at USAA because you get these plug figures that just get enormous. Your other assets is like the biggest asset on the balance sheet. And you're like, what? It used to be 0 and now it's 47 billion. So while I was doing that project, I found a trick to keep those accounts from getting so out of whack. So I'll show you my sweet trick. And then some of these will tie back to the income statement. So the most important one is interest expense. We couldn't finish interest expense on the income statement because we had to know how much debt we have, and we don't know how much debt we have until we finish the balance sheet. So we have these circular issues. So I'll talk about how I handle the circular issues. I do not use Excel's circular formula trick because I don't really understand it and I don't trust it. So I don't know if y'all been taught to do that in your class, just like Excel do it, but I don't. I don't like circular formulas, so I'll show you how I handle the circular formula issue. So there's some things we'll get back. And then what we're going to do, which is one of the most important things, if you haven't done this, I think most of y'all have done this, but is then build the cash flow statement from the income statement and balance sheet. So hopefully y'all have done that at least once in your career, but if not, what I've discovered, most students have done it at a real simple level, but now we're going to do it with a fairly complex company. Have y'all done it with really meaty company and got it all the work out? You know, every line. We did it last year with Facebook, and my first attempt wasn't even close, but you got to go every line by every line. You got to make sure you got every line on the balance sheet taken care of, and then make sure you didn't go the wrong direction once. You added when you should have subtracted. So we did it in class, and I just couldn't get it to work, and then I spent some time out of class and figured out my errors, and we got it to balance at the end. So it should balance. I did this at UTSA as well. You know, just, you can set this up. We had to build cash flow statements, and I did it the same way. And it's just so tough because you have so many line items. But that's the key: is you take the balance sheet and you make sure. I mean, the key to doing this is the change in cash equals the change in everything else on the balance sheet. So you just got to go every line on the balance sheet. So accounts receivable change. What is that? Well, if accounts receivable increase, that reduces your cash from operations. If inventories increase, that reduces your cash from operations. You just go line by line by line. All right, so we'll do that. That's a pretty important concept. We'll then build our ratios and build graphs looking for anything unusual. You know, Costco's a fairly predictable firm, so we shouldn't see a spike in something all of a sudden. One of the challenges we have at Costco is their dividend policy is so bizarre. So we'll have to try to figure out if we can guess what they're doing. Are they doing like a big dividend every 3 years? I don't think it's that consistent. I think it's sometimes every 3 years, sometimes every 4 years. But we'll try to figure out if there's something that happens, you know, their cash builds up or something that gets us that dividend policy. But we're looking for some kind of trend. We'll also compare it to other forecasts. I always like to do that. I encourage you to do that in security analysis. So Costco, we can go to Bloomberg and we can get other people's revenues forecast for Costco, other people's net income and earnings per share forecasts for Costco. So we can actually compare, not that we're going to copy other people's, but if our revenue forecast is 20% higher than somebody else, you know, than the consensus, and it's like, okay, these guys are doing that for, you know, 50 hours a week. Maybe we're missing something. Why are we so much more optimistic than they are? And so that's it. That's what we're going to try to do. So we're going to spend some time on revenue this next week. So let's think about revenue. What's the driving force? So for Costco, you got to look at the components. And for Costco, it's going to obviously be stores. They build a new store, the revenue is going to go up. And their stores are all very, very similar. So we're going to look at the stores. Then you got the membership fees. Well, that's also probably tied to stores, right? You add a new store, you can get new members. So that's going to be pretty close. The question, though, is we need to look at the membership fees and see how stable are they. I don't know how often Costco increases its membership fees. What are their membership fees? What does Sam's charge? When's the last, any of y'all Costco members?
I am.
Your parents probably are. I've been. So yeah, if you know someone who's a Costco membership, you know what the membership fee is and what it, maybe we could probably on the internet find the history of Costco's membership fees, what they are versus Sam's. So membership fees, it's going to be membership times the fee. So we got to figure out the inflation on that. On stores, we're going to be looking at revenue per store times the stores. Where with Costco has a very explicit, clear strategy on how to add stores, but there's more we can do that. We got to say, where are they? Where can they be? You know, Costco has to be in big cities. How many Costcos can be in San Antonio? How many Costcos can be in Austin? Where is the saturation? If they're adding X number of stores a year, where are they adding them? What cities are they in? How many more can they build? You got to ask about overseas. Are they starting to build overseas? How does this model work? And sometimes stuff that works in the US doesn't work in Europe, doesn't work in Asia. So you can't always assume. I don't know where they are as far as Mexico and Canada. I don't think they're overseas at all. So we're looking at that kind of thing, membership fees. And then there's other, and I'm not sure where Costco is on this, but the thing you notice with Costco is there's a lot more stuff in the store. You walk in, there's a dental office, there's a restaurant. I know people go to Costco just to eat in their restaurants, which I did that once, and I'm like, I still don't understand this, but you know, what are they getting kind of fees from that? Or, you know, if you put your dental office in there, so we'll have to look and see. We can only deal with what we have access to, and we'll have to assess that. But I do like the fact that Costco is starting to do more healthcare kind of things, you know, kind of try to take advantage of this industry. So once we get that, it really does get a lot easier. So we have to think through here, what do we want to assume on each one of these? So one thing I'd recommend that you do, if you have time, is the podcast business breakdowns. I don't know if y'all have been in that podcast yet, but they have a Costco one. It's a really good business breakdown, except for they completely ignore online sales. So, you know, that's something, what are we going to do? I didn't put that up there, but online, does Costco have any online presence at all? You know, as far as the saturation, Costco's a little bit different. So people don't mind driving an extra 5 to 10 minutes to a Costco because they're going to pick up, you know, a bunch of stuff. Whereas, you know, Walmarts can be within a couple of miles. There's 2 Walmarts right next to where actually there's 3. I can ride my bike to 3 Walmarts and not be winded at all. I mean, they're right next to each other. I can't think of where the closest Costco is, probably the one right up here. I don't think there's one over on that side of town. So they're a little more spread out, and I think they're always going to be more spread out. I don't think Costco is going to be quite as saturated. So that's something to think about, is how much more growth can they have in the US before it just gets to the point they can. But they're very deliberate. I love their management. I think if you listen to that podcast, you hear they have a very, very clear strategy, which makes them a little easier to forecast than other companies. So that's our goal. So we're going to start next week, making sure everybody's got Capital IQ set up and you got the data, and then start working on that revenue forecast. So how many of y'all done a revenue forecast before in a class? Have you done one, Sergio? Is it an actual company, or do they give you the data?
They give you the data.
Give you data.
And like, is there a general, so I think for Costco, it makes sense to do like revenue per stores and sort of that application. Would you say there's like a general rule of thumb on how to approach type of revenue forecast, as opposed to looking at the specific segment?
There's other approaches. So this one is the turnover approach. So it's pretty obvious their revenue is going to go up as they add more stores, because the existing stores, yeah, they put a new store down, they're not going to attract a whole lot more foot traffic to a store, more than likely. They're probably kind of, each store is fairly common. So that's fairly straightforward. Other approaches, and revenue is the most important. So if you look at in our secure analysis class, the Coca-Cola one, it's the driver approach. So you say, here are the factors that are key to revenue, and you list those factors. So for him, he talked about, okay, people aren't drinking as many soft drinks for Coca-Cola. There's a shift to other drinks, that's got a factor. But they are still expanding in emerging countries, so emerging countries are a factor. Inflation's a factor. sugar, water, those are factors. So he just goes through what are the things that we need to be looking at, and then you look at each one of those and you somewhat apply a factor to them to say, okay, this is a negative factor. It's going to dampen our revenues by 2% or so. This is a positive factor. It's going to give us growth of 4% for a few years, and then it's going to level off. So that's an approach. The other is the segment. You just take each segment, look at its growth, forecast each. So I don't know if Costco, we really need to do that because I'm not so sure the membership food fees are going to be really radically different than what we're doing on a per store basis. But that's the approach. When I think about the driver approach, with Costco, it is revenue per store, but we also have to think about population, populated gross, and inflation. So eventually, a store like Costco, as they get bigger and bigger and bigger, it's eventually all they can do is just grow with populations. They got stores in every city, and all they can do is wait for those cities to get big enough and they can add another store. So population growth, and then they'll just grow with inflation. Their prices grow with inflation. So the big question is, when do you hit that saturation? So like with Facebook, we didn't actually go into the details, but we could have. If you go country by country and you ask what percentage of this population is on Facebook, and you compare it to other countries, and you try to get a sense, okay, Saudi Arabia eventually is going to have 40% of their population on Facebook. Today, they're 16%. How long is it going to take? You go country by country. Facebook's really easy. It's advertising dollar per active user. So your big problem with Facebook is active user. Well, that's country by country by country. And then what do you do with the China? What do you do with the India? What's the bandwidth? What's going on? You got to look at technology. So you really, for something like that, you have to go country by country. Costco, we have to ask the question, are they going to go overseas? And then what will that mean? But even Facebook, once Facebook has 5 billion users, all they can do is, when someone's born, they've got a potential new customer, but that's all they can do. You run out of runway. And Costco, and I think that's one thing Dr. Darren says is students, they have this fast growing company, they keep it growing fast, and eventually they have 140% of the world population. And you're thinking, unless you're going to sign up dogs and cats, you're just you run out of people. So these fast growing companies just can't do that. And I think that's one reason Costco is so deliberate. They don't want to, their goal isn't to grow real fast. Their goal is to grow in a very logical way, so they don't cannibalize their own business. But even then, there's going to come a point where they just can't. Starbucks was just growing so fast, store. And I remember one time sitting in New York City, sitting in a Starbucks, looking at a Starbucks, and thinking, this is a little overkill. I mean, they say they're on different blocks, so they're different neighborhoods, but still, I could walk across the street to another Starbucks. So, all right, so this is our approach. This is what we'll do. We'll spend some time on the revenue forecasts. And I think you can see, once you have a good revenue forecast, it really does get pretty simple. It's hard to get the cash flow statement to work, but that's just a technical thing. It's the technicals is straightforward. It's just making errors as we go along. So, all right, so that's our game plan. Any questions on that? Keep trying to get your capital IQ up and running. And if any of y'all want to do a little capital IQ research, I'll be doing that as well, seeing what else it can do for us. The library really wants feedback on how valuable capital IQ is. So I do like the feature that, with one click, I got all this stuff. So that's kind of nice. So you really can't do that in Bloomberg. It would take you, you can use the FA function in Bloomberg, but you have to take each one at a time. They don't have a function, you just say dump everything you have on this company. So that's a nice feature. And if you notice with capital IQ, there's a lot of more stuff over here that we might find interesting. So we'll just have to see. It'd be nice to compare this to Sam's. I just don't think we can get Sam's data outside of Walmart. It's all part of the same. But that is an issue, if they add another Sam's, is that Can you think of a place where Sam's and Costco are right next to each other, or do they tend to avoid each other? And there's a Sam's like on 410. It seems to me that they tend to avoid each other. So once a Sam goes up, that kind of shuts Costco out. So that might be interesting. I get the feeling Walmart is not, I don't have a TV, so I don't know the advertising. I don't notice Walmart pushing Sam's as much as it used to. But. All right, so that's it for today. That's what we'll do next week, is we'll work on the revenue forecast. And then from there, we'll move fast, really fast. Any questions or anything? All right, send me your email, either email me or it's on the chat. So I've got Beatrice and Colin and Cameron and anybody else, Daniel. Okay, okay, yeah, just send me I'll get the chat and can email it to myself. So I will set up a Google Doc or Google Drive, and we'll keep our work there so that if you miss something, you can pull it up and see what we did. All right, thanks everybody.
All right, welcome everyone. My name is Miguel Covarrubias. I am a senior here at UTSA, and I have been in the Investment Society since sophomore year of college here, and I've been with the society for a couple of years now. I've done a couple roles. I've taught a myriad of classes, but all of them actually have in common one thing, is that I've always kind of talked about crypto for a while now. And the reason being is it's just something that I'm genuinely interested in. Like me and my friends kind of got into it when I was in high school, and I always thought it was interesting, and I kind of just kept up with it. And some people thought I was crazy. Like I'm telling you, like there was a lot of times during the dark days, like I like to say, when the crypto market's down, no one likes to be a crypto supporter, and everyone kind of hates on it. But when it's up, then they start asking questions. So I think my goal of this class is I just want to take any bit of knowledge that I may have learned and just pass it on. And I really want to just teach y'all what I have learned, and just pass on the knowledge. And if you want to, if you're interested in it, continue your curiosity. That's what I would say my biggest piece of advice is. Don't let anyone tell you anything about crypto. Make up your own decision about it. Do your own research and come to a conclusion on yourself. That's what I'd say my biggest piece of advice is. But we're going to be talking about a lot in this class. We're going to be talking about the basics, and we're going to be going in depth. So we're going to start off by kind of just going over a general overview of the crypto market as I see it. And we're going to be going over some differences between Bitcoin and blockchain, and then Bitcoin and other cryptocurrencies, because they kind of get confused, and sometimes people don't have the right perceptions of what they are. But it's still open for interpretation. But let's start with, what is the history of money? Like, where have we gone? How have we gone to this system? Like, it's kind of weird. It's kind of an abstract concept where we kind of exchange our time for money. So that's a job. And we use that money to purchase goods and services. But what is the value of that money when it's created out of thin air by central banks, right? So we started off with a system of the barter system, which made sense at the time, when if we had two goods that could be exchanged of equal value and we thought that value was fair, we did it. And that's where the first system, we would trade and we would barter goods. In 1200 BC, we then started to think of different systems. Maybe we can replace, maybe it doesn't make sense to trade things because things don't necessarily have equal value all the time. And it doesn't make sense. You can't break up a gold bar into 10 gold pieces, on the spot, if you need some change, right? So we had to think of different systems, right? So we adopted the shell system, something to replace the quote unquote value. And then we used that for a little bit. And then, 700 BC, we had minted coins, we thought, hey, maybe the shell someone could counterfeit them easily. So maybe that'd be a good way of getting around that, right? So we thought of a different solution. So our solution was minted coins. So we go and we're living through that. We're having minted coins for a while. And then we have almighty gold standard, which we've had for a decent amount of time. I would say that, the gold having a perception of value has been around for quite a while now. I would say one of the longer stores of value in world history, other than land, I would say. So we had the gold standard for a decent amount of time, from 1870 to 1930, and then we adopted the Bretton Woods system. So this is kind of a pivotal change that most people don't really know about. If you know about it, great, that's awesome, but do more research into it, because it's kind of interesting when we literally shifted the idea of having a gold-backed system to a fiat system. So that's kind of what happened after Bretton Woods. We have fiat. So after 1971 and to current times, we have the fiat-based system. And fiat is just a fancy way of saying it's backed by a central government. It's a government-backed currency. So who controls the money supply for the United States? The answer is the Fed. The Fed is the one that controls the money supply. And are the Fed elected positions? I don't think so. I think they're appointed. And most of them are bankers and been around the banking system for a while. So it makes you think of like, what is money, right? If money is simply created in a room out of thin air in central banks, and that's what we perceive as value, we got to think about it as in one person exchanging something else for what is perceived as valuable. So what gives the US dollar a lot of value is the US is like one of the #1 superpowers in the world, with one of the largest militaries and a large global presence. And the fact of the matter is that is worth something when it comes to our money. Even if we print literally trillions of dollars, people are still going to use our currency system because we have all the power in the world right now. That's the current system right now. We have a very centralized system. We have different central points, right? We have the European Central Bank that makes a lot of decisions. We have and that's what's going on the next slide. These three people, I mean, you may know them, you may not. Top one here, this is that meme, which is Jerome Powell with the money printer going burr. So that's our central bank leader right there. In Europe, you have the European Central Bank leader right here, and then this is the Chinese Central Bank leader. I mean, these are people that have enormous power over our daily lives, yet you don't really hear about them, or you don't really know about them, because, that's how finance is kind of like put to the side sometimes. It's not really in the limelight. But I mean, these are the buildings that they occupy. You can see they're big, really expensive, nice buildings, because these guys have a lot of power. I mean, they control our money supply for a whole entire government, So right now we're dealing with a potential government shutdown if Congress doesn't pass a bill to raise the debt ceiling. And that has to do with these guys, because these guys quite literally control our money supply for the whole world. Before we kind of jump into anything, I want to just go into a big thing I've been noticing. Sometimes when people are explaining crypto, they get confused between Bitcoin and blockchain. So blockchain is kind of the underlying technology per se, and Bitcoin is an actual cryptocurrency that has an actual spot in the ledger, and it's an actual verifiable thing. Blockchain is more of a term, and Bitcoin is an asset. So what is the difference here? So, a Bitcoin is a cryptocurrency. Blockchain is a ledger. It's more about the record of account. Think of that, record of account. It provides a low cost, safe and secure environment for peer-to-peer transactions. So blockchain technology has been taken through other projects like Ethereum, Cardano, and they've built decentralized apps on top of them. So they're using that underlying technology from Bitcoin, but they're not Bitcoin. They're different than Bitcoin. So Bitcoin has a limited supply. This is a very big point, because we were talking about central banks. We're talking about what is the value of money, et cetera. One unique thing about Bitcoin is there's 21 million Bitcoin, and that's it. It's a hard cap, meaning that there's no more going to be minted after that. After that, we're done. So what's interesting about that concept of finite supply is it's similar to gold. in the sense of because it's a finite supply, it has scarcity, and that's what gives it value. But there's other aspects of it that make it unique from gold. So Bitcoin, a good way of summing up in a quick, if you're talking to your grandparent and you're trying to explain what it is for them to conceptualize it, saying it's a digital gold is a simplification of it, but it has its uniquenesses from gold. But we'll get more into those later. But just in general, it's important to think about the difference between when you're talking about blockchain with somebody and then when you're talking about Bitcoin, the actual cryptocurrency, because sometimes those conversations can get a little bit confusing. So let's shift to the blockchain side of things. So when you think of blockchain, think of four things. So you have minting, the creation of new coins. In the process of Bitcoin, it's done through a proof of work system in which GPUs pretty much validate and ASIC miners validate the system, validate the transactions that are going through the decentralized system, and then they get rewarded off of that. So you have the decentralized system. Think about the ledger. Think about the record of accounts. Think of all the record of all the transactions, and that's similar to what the distributed ledger is. And then safe and secure ecosystem. A lot of this was. Think about when the creation of Bitcoin and cryptocurrency was right after 2008. So in 2009 is when things really, that was the birth of it. And what problem was it solving? It's solving trying to solve some of the mishaps that happened in the 2008 financial crisis, because there's certain things that human nature honestly causes financial crises when you really think about it. And human nature is the one thing in banking that is hardest to account for. So that's another key aspect of a decentralized system, is that rather than having a system that's centralized and one of its biggest flaws is human nature and human greed, you have a decentralized system which doesn't have emotions like that. It just validates transactions based off what they are in the actual transactions. So think of safe and secure of like it's government free. It's a system that it's set up on its own. Further differentiation between Bitcoin and cryptocurrencies. So Bitcoin is its own cryptocurrencies, but you have a bunch of other cryptocurrencies. You have Ethereum, you have XRP, and we'll go over some of the top 10s here in this next slide. Here, look, you got Cardano, Binance, Solana. You have some stable coins like Tether, USDC, Polkadot, and Doge. That's a good, funny one. But yeah, I mean, another concept that you want to think about is the difference between when we're talking about Bitcoin and when we're talking about other cryptocurrencies, because Bitcoin is the first cryptocurrency. So Bitcoin has a certain kind of follower base. You can call them Bitcoin maximalists, where they're just like, Bitcoin was the first cryptocurrency, it's the only currency that matters. And there's some kind of a little bit of truth to that in the sense of like, whatever happens to the price of Bitcoin has a ripple effect on the other prices of other cryptocurrencies. So it's something you always want to keep an eye to. If you see the price of Bitcoin drop 10, 20% in a day or a week, which can happen in the crypto market, you have these crazy volatile times, you'll see the other currencies react to that. So it's important to think of the differentiation, but there's also a correlation between Bitcoin and other cryptocurrencies that you want to pay attention to. So right now, this is what kind of the market looks like. This is the top 10. So we'll go more into depth on like what the actual projects are, but just kind of think of this as kind of like the S&P 500 almost. Like the top 100, the top 10, this is like, these are the top echelon of projects currently valued in the market. Go ahead.
What's the smallest cap you have?
In the sense of what? Smallest cap.
Market capitalization.
So these are just the top 10, but this can go very, very, very low. So let's go to CoinGecko.
I remember you were talking about Ravencoin or something like that. I think that was almost one of the smaller ones.
Yeah, Ravencoin.
Relatively, of course.
Ravencoin should be down here somewhere.
I mean, because these go on.
Yeah, I mean, there's literally thousands of cryptos. Let's search for it. I'm curious to see where it is. And we'll talk about the different projects. Here we go. So it's ranked 101 right now on CoinGecko, and its market cap is around
just under $1 billion.
Yeah, just under $1 billion. And in comparison for everyone else, so that's $1 billion in market cap. Right now, Bitcoin is 800 billion, if you're rounding up, and Ethereum is 300 billion. So really big market caps. It's crazy to think that we have over $1.9 trillion, guys, in the crypto game. And think about this, like, this was created in 2009. That was like 11 years, dude. 11 years, and you have $1 trillion industry that literally created out of nowhere. And where all that energy, all that money is people putting the money into the belief in the idea that we can have a monetary system outside of government. And that's actually kind of a radical idea when it was first proposed. Like right now, we kind of take it for granted that we have it and it's actually kind of working. Like I've bought and like, you know, I've held it, I've bought it, I've sold it, you know, and I've had it for years. And it's like, it's not a system it's a system that's been proven now, actually, which is kind of the crazy part. And that's why I love talking about it. And I'll literally talk about it all day, every day. And I can have very long conversations about it because I enjoy talking about it. I think it's fascinating. And I think it's cool that we have an alternative to, you know, money sources, you know, and it's interesting to think of like, you can quite literally invest your money into these projects and watch it throughout the years grow. And I think the idea that you want to have with when investing into crypto is to really, you want to let, it's more risky than traditional stocks or bonds. So you treat it as such. You're not going to want to put all your money into crypto. Don't do that. I don't want y'all to do that. I don't recommend that. But, you know, think about what risks you are willing to take. What are your time horizons? If you're a young guy in your 20s, you know, you got a lot of time to invest your money. And if you just take a small amount, you know, $10 can buy you 5 Cardano right now. And right now, if you say, let's say you buy that 5 Cardano, you buy 10 bucks. And let's say every month, you know, you get a paycheck and you put 10 bucks and you start to do the math. And let's do it. 10 bucks. And then you multiply that by 52 weeks. Or sorry, 12 months in the year, it's $120. And let's say you're earning 6% on that. So you have $120 and you're earning 6%. So what, that's $7.20 APY interest on that. And then that adds up. So it might not seem like a little bit like 6% interest rate, but the cool part about Cardano is you have the ability to stake it. You can quite literally earn interest on your money by just holding it. And that's something that you can kind of do with traditional banks. But the problem is they hide the back end and they take the majority of the profit because they don't have the incentive to give you the percentage of the return because it takes away from their own return. So that's the problem with banking institutions is they're always going to give you that 1%, you know, on your savings account, right? They're 0.1%, 0.01 or 0.5%. I think they always change it, right? But you're not going to get a really valid percentage. The beauty of crypto is you are your own bank. There is no middleman between that currency and anyone else. You quite literally can create it using GPU power and you can hold it on your computer without anyone telling you anything about it. You know, no bank or government can, you know, really tell you to do anything with your crypto or not. So that's the beauty of it. You know, we're getting more control of our assets, you know, in the modern world, which is awesome. And you know, it's liberating for people who might have been marginalized by the current system. So that's another beauty of decentralization in crypto. It doesn't know race. It doesn't know, you know, what your ethnicity is. It doesn't know what country you're a part of. It doesn't care. It's quite literally a coded system that's completely, it's equal, you know, and that's the beauty of it. And it's constantly changing. So here's another interesting aspect of it. An interesting concept to start thinking about is DeFi and decentralized finance. This is kind of the ethos of cryptocurrency, and it's kind of has its own movement within cryptocurrency. This is kind of like a subsector of crypto as a whole. So if we're talking big picture, we have crypto as a whole. We have blockchain technology. Within that, we have Bitcoin as an asset. We have all the other cryptocurrencies. And then we have this concept of DeFi. And DeFi stands for decentralized finance. And right now there's about $80 billion locked into it. And this really is, decentralized finance is all about being your own bank and earning your own interest rate and loaning and getting business loans via crypto and having and being to be able to loan out your money. So that's a cool thing about DeFi. One thing you can do that people are earning really big percentages is they'll give their money via a contract, a smart contract, to a trader, for example. That trader is going to take that money, and there are basically that smart contract in place has an automatic system where once they sign up to get that money, they can use it for whatever they want. They can make their trade or whatever. And if they make money, great. If they lose money, whatever, they still have to pay the percentage, right? So that is how it's just like how a bank works with a mortgage loan, for example. So a bank will take its money in its in reserves, and it will loan it out to other people to earn interest. And that's kind of what you're doing with DeFi is you're taking your own funds, you're loaning out to other people to earn your own, percentage, your own points. And it's still a new industry. And let's go into kind of like the different aspects of it, because you have the lending aspects of it, and then you have like the decentralized exchange aspect. So this is a good resource. DeFi Pulse is what it's called. And if anyone in the Zoom has any questions, feel free to just drop them in the chat. But yeah, so right here, let's go to lending. So for lending, you have Aave, has the most value locked in. Then you have Insidap, Compound, Liquidity, TrueFi. Some of them have funny names. For decentralized DEXs, that stands for decentralized exchange. You got Curve Finance, Uniswap, SushiSwap. So decentralized exchange, think of like the NASDAQ, but the crypto version of it. Like an exchange where it's completely decentralized from a government, system. So Kyber Finance is another one, Loopring. And the beauty of it is there's going to be winners and losers. Like not every crypto is going to turn out good, and not all projects are going to win. But I mean, it's not necessarily a bad thing. You're going to have winners and you're going to have losers, and your goal is to try to find who those winners are. So you get derivatives, payments, and then some other assets here. So that's just to give you all just a general rough idea, right? We're going to go deeper into it as the classes go on, but just in general. So some potential weaknesses of cryptocurrencies that you might want to consider. So proof of work takes up a lot of power. Like when I say a lot of power, like a lot of power. So I have a mining rig at home. This is what a GPU box looks like. This is what, this is a GPU. So this thing consumes about 3080. It's going to be adding around 250 watts of power consuming per hour. And that adds up over time. And that's just a GPU-based system. So with miners in proof of work, you have GPU miners, and then you have ASIC miners. ASIC stands for applicated, I might butcher this, but application-specific integrated circuit or something. And it's basically a fancy way of saying it's a computer specifically built to mine one cryptocurrency, or maybe two sometimes. And it's just specifically optimized just to mine that. So you'll have Bitcoin ASICs, you'll have a whole farm set up with just a bunch of these ASICs that all they do is they're built and designed to just mine that specific algorithm. So the cool thing about GPU mining a little bit different is that you can mine multiple algorithms. So I'm mining the Ethereum algorithm. I'm mining the Ravencoin algorithm, as he brought up. And that's because I'm just going to mine whatever's most profitable. And to be honest with y'all. So and that's the beauty of the free market is over time, whatever is the most profitable project, whatever is the best project to mine, that's where the miners are going to put their hash power towards. And hash power is how much, quote unquote, work is done by these guys. So this thing will have a hash rate between, 60 mega hash to 100 mega hash, depending on your overclocks. But it basically, that hash rate is you contribute it to a mining pool, and then that's where you get paid. So in summary, you're taking electricity, using your hash power, and then getting paid for that. And it takes time and money and investment to get it set up and a lot of research. But once you do it, you kind of learn, and it's a continual process. But anyways, some other potential weaknesses. Hardware demand is going to be a drain on resources. So just the physical demand of building, and the resources of building these computers is a drain on resources. So that's another potential weakness. But there's also potential solutions. So like proof of stake, for example, doesn't have any miners associated with it at all. Zero computers. It's all done through a proof of stake system called Ouroboros. That's what Cardano uses, Ouroboros, and it's basically a peer-reviewed system that does what proof of work does, but with a significant less amount of energy. So what are some other parts? Lack of comprehensive legislation with the industry. Right now, it's kind of a little bit. It's not as the Wild West as it used to be, like pre-2017. But we're still needing more regulation. And I don't think regulation is a bad thing. Like a lot of the crypto community kind of is anti-regulation and just doesn't want the government to be involved in it at all. They're kind of just like, let us do our thing. But I don't think that's realistic. I think if we legitimately want it to be that world-changing thing that some of us think it may be, it requires cooperation with the government. So that's going to be another kind of potential weakness that we need to look out for. And then when does a decentralized system not make sense? One thing I kind of keep thinking, or I see get brought up a lot, is like crypto is going to solve everything. And it's not, like there are some times when crypto doesn't need to be applied. Like you don't need to make a token for everything. You don't need a McDonald's coin. You don't need a Starbucks coin. You don't need every single thing to be decentralized. There are certain things that the solution actually makes sense for. Maybe like, we'll go into some other examples later, but like sometimes it makes sense, sometimes it doesn't. So my thoughts of investing in crypto in general, pay close attention to what's happening in the 5 to 10 year outlook for projects, and pay very vague attention to the day-to-day price movement. And that's something that took me a while to kind of get my head around, but it takes a while for your trees to grow. You got to plant your orchard early, and you got to be patient with it, because crypto is volatile. There's going to be a lot of times when it's going to be down, and you got to be willing to kind of look at the bigger outlook. And if you really believe in it, stick it out. If you think it's too risky and you think you're not about it, then don't invest into it. I mean, I would say it's really one of those things where it's like, you got to look at the big picture. And then the concept of winners and losers, like you have to think about the crypto market as a whole. If you're going to put your money somewhere, where do you think, who are going to be the biggest winners? Who has already won a lot? So I'm not necessarily saying just pick the top currencies, because a lot of the gain has already been realized. One thing about investing is sometimes you want to be looking for those up and coming projects. That's where you're actually going to see a bigger return. So just another thing to think about is think about winners and losers, and who in the crypto market's winning and who's losing. And then risk tolerance and time horizon. This is super, super important. Risk management. Don't invest any money that you're not willing to lose. think about your time horizon. Are you investing in crypto for 6 months? Do you want to pull out your money before the end of the year to like, you know, buy some gifts for Christmas or whatever? Or like, are you holding this to just have it as a short-term investment? Or are you holding this for a long-term investment? Are you potentially saving up for like a down payment on a house or something like that? Saving up for a bigger purchase or another asset that could potentially produce some more money for you? What is your time horizon? Ask yourself that. And then when you make your decision, have that in mind. And then another thing is price can be deceiving, y'all. Just because something is priced low and you can buy a lot of the tokens doesn't necessarily mean it's more valuable for you. You know, just because I can buy 100,000 shares of a penny stock, and if the price just went up to $1, you know, I've heard that's something you'll hear a lot in the cryptos. Oh, when this coin hits $1, I'm just going to cash out big, you know? Sometimes those coins that are like less than like 2 pennies or like less, like you can just buy a bunch of them and they're going to be out there and you're going to run into them. Just think about the market cap, because price can be deceiving. Think about the market cap, because price isn't everything. And then, that is it, y'all, for today. Do y'all have any questions? I want to know what questions y'all may have around crypto, maybe getting started. Or let me ask you this question first. Who here, by raising of hands, owns crypto? Sweet. Okay, we got 3 hands. Okay, that's awesome. I'm very happy for that, because it hasn't always been like that. So let me follow up with, for the people that own crypto, what crypto, if you're cool with sharing, what cryptos do you own?
ETH and ADA.
ETH and ADA?
Yeah.
Nice.
Right now, just ETH.
ETH?
I have 2 miners, so I have the ETH, and then I have a 1050, which is not my ETH, I'm mining Raven coin, just have Raven.
Some Raven. Okay, good, nice. Okay, that's actually pretty solid. I like that you got some Cardano there. How did you get into Cardano? What made you kind of separate yourself from ETH?
Well, in the beginning, I was just like, oh, it's just like a flavor of the month thing. And then this guy I kind of watched, he was talking about it for a while. And then I was just like, you know, if you look at the chart of some altcoins, like they'll have the huge pump and then years later, they won't even get close to reaching it. And if you look at ADA, it just it goes up like you would see ETH or Bitcoin or stuff that lasts a while.
Yeah.
So I got into that, fixed all of that up, but yeah.
No, that's awesome, man. I definitely know what you're talking about. And I saw that momentum as well of what you're talking about, where like a Cardano in 2017 was at like $2 and it crashed down to like under $1. And then now it's just been picking up steam. It hit like $3 at one point. Now it's back to like 2. That's awesome that y'all own ETH. I'm sure that's, depending on when y'all bought in, that's probably been a good investment for y'all. But it's cool to see that ETH is honestly one of my favorites because I mine ETH. And it's super cool what they're doing they're kind of the OGs to do the whole NFT thing. So it's like the whole NFT boom that's kind of happening right now.
All the feeds are in ETH. Right?
Yeah, a lot of them are ETH, but a lot of them actually are moving towards Solana. So one of the top 10 coins, Solana, and we'll get into it more next class. But one of their big claims to fame is they just have a better, more scalable system than ETH. And when it comes to those NFTs, because you'll notice crypto companies are running into problems with either scalability or whatever it may be, and solutions are being created. So what's interesting is, like, when we go back to the very beginning of the presentation, and we're talking about the history of money and what is valuable. Think about that when you're choosing your projects. What value is being created by this project? And really think about that. Like, what is the value of Bitcoin? Why are people literally spending so much time and energy into Bitcoin and have for the past 11 years, since 2009? Why is there almost $1 trillion worth of monetary energy in Bitcoin? Why do we think it's valuable as a society? So ask yourself those questions. And thank y'all so much for coming out. We will be having class at the same time. So Wednesdays at 6 p.m. And I'm trying to keep them short, like 30 minutes to 45 minutes. And Yeah, thank you all for joining virtually. I do have some questions I want to go through real quick. How do you mine ETH? I thought it was proof of stake. It is moving to proof of stake. So right now it is transitioning. So it hasn't fully transitioned to proof of stake yet, but it's trying to. So we'll be going over the specifics on how to set up a miner in another class, because that deserves its own presentation. But yeah, and then I see I have another question. What is our ROI? I won't be going into the details of all my positions and ROIs. I will tell y'all what coins I'm holding in general, but I have so many accounts that it's kind of hard to even keep track of like my original ROIs. But one piece of advice I would give y'all is don't put all your eggs in one basket. Remember that. Do not put all your eggs in one basket, because I've been in the crypto space long enough. Not every single, exchange out there is gonna have your best interests at heart. So just remember, as a consumer, you can choose what exchange you use. So use that to your advantage and have multiple different options, and don't put all your crypto in one basket, because I've known people who literally have lost all their crypto because they was on an exchange. That exchange got shut down for whatever reason, and they lost their crypto. So that can be avoided if you spread it out. So just one little piece of advice there. But awesome. I'm gonna end the Zoom.
3-year sales average growth and EBITDA to revenue.
So go to C3 or C2. You're going to do equal B as in boy, D as in dog, P as in Paul, over parentheses. Go over and find your ticker. Go left. It's your F4 what? You lock in that A. Comma. Go up to C1. F4 twice. And we'll have to take this out for the other line, but divide by a billion. Not the zeros.
Did he say a billion?
Sorry, Danny, one more time.
Did he say a billion? Divide by a billion?
Yes, divide by a billion.
Yeah, I just think the numbers are so massive, it's just, so even if Coca-Cola is a $226 billion company, Procter & Gamble, 339.
So yeah, instead of looking at billions, you're looking at cleaner numbers.
Right, so take that C2 and copy it over to P, but we'll have to divide by a billion now. Bring it over, take the billion out. And then you can just copy that over to the next one. Copy that down. Wow. So now you got all this data. So the question is, you can sort it by company size. You want to see where the largest ones are. You can sort it by price to book to see who's the most expensive company. You can sort it by sales growth to see who's growing the fastest. I mean, look at Medabel. What was that company? Not word Medabel. Go to the top again. Medabel is growing 395% revenue growth. So it's only a $100 million company, but they don't have any earnings. Performance Food Group, $7 billion company, growing 20%. But it's not all that profitable. You're seeing all this kind of things.
So cool.
So you can sort by company size. You can sort by how expensive they are. You can sort by revenue growth. You can sort by profitability if you want to kind of see which companies the best. You want to, yeah, you can do as a filter. Just take each column and sort. Walmart. got Walmart in it, don't you?
Wouldn't Costco be in the top as well?
Yeah, I don't know where your Walmart is, so. Actually, you're Russell. Have Walmart in it, but where would Walmart be? It's not making. But go, see where it says ticker?
Oh, it's on consumer discretionary.
Consumer discretionary. All right, so let's see the thing we're gonna have to do between you and consumer discretionary. We may disagree for how it also classifies that we might move stocks from one versus the other. To me, Walmart is, in Costco are definitely staples, whereas Target, I would put in Kohl's, I would put in discretionary. So you may have some that can move around. Amazon, I consider that discretionary, but you know, you can debate some of these. But you have what you have, so you go back, you look at it. You know, so we can, on the Tyson's makes sense to be in there. And you look at the price, well, Colgate, man, look how expensive Colgate is. 137.4. That probably is because they've been buying their stock back, so their book values is pretty.
So in sector GICS, they have Walmart and Costco.
In which sector?
Sector GICS.
Well, no, GICS is the sector. So you want to switch it to maybe industry, but which sector do they have it in? So the sector's not GICS.
No, the group, sector GICS and consumer staples, they have Walmart, Costco.
Oh, I see. Oh, I see. Yeah, so use a different sector than bond next week. Use the gigs instead of the VIX or whatever they use.
All right.
I guess VIX is the number. So the most expensive stock is Colgate is the second most expensive stock. It's really bad growth. It's got a really good margin. Who has the best revenue growth? It's probably that. Now, if a firm gets an NA, it probably means their net worth is negative. So yeah, that one company, they're not with Beyond Meat. Do y'all consider Beyond Meat to be a staple? I guess if Tyson's is on there.
If you're a vegetarian, yeah.
That could be discretionary because you don't have to buy, you know, bodies of beef. Road Generation Corp, I don't know what that is. New Age Corp, that doesn't sound good. Celsius Holdings. I don't know, most of those companies are really small. Go down until you find a big company that has high revenue growth. What's the biggest company with really good revenue growth? So, CVS, wow, that's interesting. But that's the other problem we have is CVS might have strong growth because they bought another firm. So it's not organic growth, and so that's a problem. And then profitability, you know, you got some firms that are losing a lot of money there. Negative 12,000. Trio, well, the cigarette companies and the alcohol companies are Monster, yeah, really very profitable firms. Monster, I'll tell you this, every time we run this model, the last 3 semesters, Monsters is always the highest ranked.
Wow.
So we'll see if that works for you.
Do you own Monster?
It's also one of the most expensive. So
Gotcha.
It's a great company, but very expensive. So Procter & Gamble, we have owned Procter & Gamble before. Big company, not too expensive. Seven price of book sounds big for this. The Campbell Soup is a really cheap stock right now. Profitable and decent growth. But it's hard to get too excited about Campbell. You know, people probably buy a lot of Campbell Soup during COVID. We had that unusually cold winter, you know.
And you can tell it's cheap from the price to book.
Yeah, Ford price to book is pretty cheap. Smuckers is really cheap. We have on Smuckers in the past.
So price to book is cheapness, sales to growth is revenue growth, and then EBITDA to revenue is telling us what?
It's profitability.
Profitability.
Yeah, it's really profit. So you know, you can run a model right with just like that right there. See, one of the things you have to do is get rid of the NA. But as Bond says, we might bring in 50 to 20 of these.
Of these different measurements and just
I
keep,
can hand you the model from last semester if y'all wanted to start with someone else's work or to start from scratch. You might build your own model and then cheat and look at the prior model and see if you want to bring something else in.
and how we build the model is we basically look at these numbers and we say, okay, what price the book do we want? And all these expensive ones, if we don't like that, we can just kick them out and then we'll go down to less of them and then we can move on to the next one. Who's got the best revenue growth? And if we don't like any of these companies with negative revenue growth here, we can kick them out and keep narrowing it down and narrowing it down. So that's definitely our goal. When we did it in the spring, I attended Professor Sweet's class where he built a stock screening model. And we did Bristol Myers Squibb, which is a pharmaceutical company. And we had about 10 companies that we were looking at, and Bristol Myers Squibb just kept being in the final of all these different scenarios we would run. And then by the end, I forget the other competitors against Bristol Myers Squibb, but we were down to about 3, and then we went with that one. And then Professor Squibb was like, "All right, now that we have one company, I'm going to start listening to their CEO. I'm going to start reading their financial statements. I'm going to start looking at their earnings." And after he spent a couple of weeks teaching us about this one company that we filtered it down to, he decided it was a no buy. There was a couple things he saw that he didn't like, and he said, "Nope, we're not going to buy it." And so we can do all this work and still come to a conclusion of no buy with a stock. So that's kind of where we're going, and a little bit of the process.
But here you know these companies like Bristol Myers, I don't know that well, but Monster. You have to think, are people going to do it? Y'all can have an opinion. People going to be buying more of that or less of that. I've never drunk a Monster before.
Me neither, but I think that people are going to drink more of that.
Yeah, we'll see. I mean, how healthy is it? How much sugar is it? But Curate, buying Dr. Pepper, and also having their own make it at home kind of thing. The firms like Clorox. Obviously that's a stock that shot up a lot last year, but it's come back down. What kind of growth is it in Clorox? Colgate, last time I made Colgate, certainly have suddenly a lot of growth. That 2% growth is just growing with inflation, right? What else can you do? There's not going to be a lot of new people born with use their toothpaste. Percy's is interesting. We have owned Percy's in the past. We've never owned Campbell's, but Campbell's has always been so cheap. We've owned Kimberly Clark in the past. We've even owned Philip Morris, so you have to say you own a company that's killing people if it's cheap.
Is Philip Morris cheap right now?
We can. It depends on. We'll do all that in the spring. So, you can. My greenhouse supplies still have a price target. I tend not to be a price target person. I'm more of a distribution person. So I'm like, I think the stock should be between here and here. And I'm looking for stocks. Almost all stocks are going to be in that range. So I'm looking at stocks that are generally in the lower end of the range versus stocks that are less in distribution. And we might do that. We did that in one competition in the sector wars where you do like a data table of all different prices and try to find stocks that are on the lower end. It's not that hard to do that if you can get down to 5 companies. You can't do that very well with 120.
We got these teeny companies down here.
Companies. I haven't heard of any of these companies. Med Express, these more and more, we're seeing more companies that used to be proprietorships starting to go public.
I like Whole Earth right here. I shop there.
They have those
Whole Earth Provisions is the name of the store I buy my outdoor clothing from in the quarry. So I don't know if that's the same as.
Yeah, I don't know, because that sounds more like a discretionary.
Yeah, that's a good point. It doesn't sound like a staple at all. So maybe not.
I mean, our model won't kick out firms under $1 billion, but you have to make that decision. Rite Aid, Rite Aid is cheap because it's going out of business, but it could be bought out.
What do y'all think? Do we want stocks under $1 billion in our portfolio? They have a lot of room to double in size real quick, but they could also go out of business pretty quickly too.
Well, part of me on the farm like that is I want to see why they're so small. Are they small because it used to be a $6 billion company and now they're a $4 million company? Are they small because they just started 2 years ago and they were 100 million out of 500 million? Kind of how they got there. I'm kind of, let's take 3 big companies and let's find one small interesting one. Kind of decide on. All right, let's get started. So yeah, so essentially next week it's deciding, which is exactly where we are in security analysis. Turnover margin, different types of margin, debt numbers, capital numbers, net working capital numbers, all that stuff that define the company. That's what you want to bring in and figure out who's doing well and who's doing poorly. The ones that are doing well are probably going to be expensive. The ones that are doing poorly are probably going to be cheap. But we're trying to find the good ones that aren't too expensive and the bad ones that are too cheap. Push down too much. Yeah, good. Sorry, I didn't report it all.
Yeah, you're better off buying a bad company at a good price than a good company at a bad price. So.
Yeah, what was it? Who's that guy? Oak Capital. There are no bad assets, only bad prices. All right, thanks, Glenn. Good.
All right, guys. Thanks to everyone who showed up and everyone online. So a little bit about me. I'm a finance major and I started learning Python a couple years ago. I'm still a beginner though. So if you guys have any questions, I might not be able to answer it, but I will take a note of it and try and get back to you next class. So why would you want to learn Python? Well, Python is a high-level programming language, which I was also confused about that. I thought high-level meant something that was like really deep or a lot of depth of knowledge, but it's actually like a shallow, if that makes sense. So it's very readable, which means that it's very close to typing out a regular sentence. So if you are coming from another programming language and then you come to Python, you can probably understand what it means because it's very close to English. It's the most popular programming language right now. So if you have a question, there's probably an answer online as opposed to a more niche language. And another thing is that it prioritizes developer time over computational time. So it's very quick to get something up and running, but the program isn't going to be very fast as opposed to something like C, which may take longer to actually get up and running. But once you have it, it's very quick. Python is also very popular in data science and machine learning. And then here are some of the resources I like. So Stack Overflow, if you have a question there, it's probably already been answered there. The Corey Schaefer Python series on YouTube and EDX, a lot of free lectures from MIT and Harvard, a lot of good stuff on there. So first thing is data types. These are going to be the basic building blocks or tools that you use when you're coding in Python. So we'll just quickly go over some of these. So we have integers, which are whole numbers 1, 2, 3, and 100. For example, they have a special keyword int, and all of these have keywords. So we have floating point, which are decimal point numbers. So 1.5, 3.333, and 100.0. So even if it doesn't have anything past the decimal point, if there's a decimal point there, it's a floating point number. We have strings, which are ordered sequences of characters. So hello world, my name is, and 300 here. So even though you see 300, you might think, okay, that's an integer. If it's in the quotes, it's actually a string. Lists, which are ordered sequences of objects. So, and we have a list here of a few of the other types of data types. So we have one, which is integer, a float, and a string. Booleans, which you've probably already seen in Excel. These are just true and false statements. I don't have an example here because it'll be easier to understand once we actually get into it. Dictionary, which are key value pairs. So I think dictionary is kind of self-explanatory. You have the like a regular dictionary where we have the key, which is the word, and the value, which is the definition. And sets, which are unordered sequences of unique objects. So I made a mistake here. It should actually be in just regular parentheses instead of the curly braces. But these, if you put, they're kind of like a list, but if you have duplicates, it'll automatically delete them. So it's only unique. So integers and floats. So there's two main types, the whole numbers and integers. Actually, here, let's open up the IDE. So go over to Windows. We're going to type in Jupyter. So Jupyter Notebook. And then we'll go over to new and Python 3.
Just before the class, I downloaded Spider.
Mm-hmm.
What I do pretty much the same thing.
It does pretty much the same thing. There we go. Okay, so does everyone have that up and running? Oh, just go to the Windows and then at the bottom left, type in Jupyter. And it should pop up right here. And then I clicked on, it should say in the top right, should say new. There's a little drop down menu, and then click on Python 3. Oh yeah, here.
How would I do that
In Spider, just open up Spider.
Oh.
Have you already worked inside of it a little bit?
No, it was recommended by the
Mm-hmm.
What should I download before the class starts?
Okay, yeah, you can use Spider. I'm going to be using Jupyter just because it's a little bit closer to something like Excel. So I think just for me, it was easier to learn on that one as opposed to Spider. I can try and help you out on Spider, but I might not have the answer. Are you using your personal?
Yeah.
Oh, if you use one of these, if you want, I think you should already have Jupyter downloaded. So everyone pretty much there. So integers can become floats, but floats won't turn into integers unless specified. So I'll show you what I mean by that. So in Python, we have the regular operators. So and then the asterisk for multiplication. And division. And so here, before I can get too ahead of myself, the way I'm running these cells, I'm clicking on Shift and Enter at the same time. So here's what I meant by the integers can turn into floats, but not the other way around. So here I had 2 divided by 2 and it produced a float because there's a decimal right there. But if I multiply a float, it's going to give me another float as opposed to so one of the unique operators is let me go back to I'm not sure I pronounce the module, I just call it the mod operator. It's denoted by %, and it returns the remainder after division. So if we go back and, for example, okay, 7 divided by 4.
Are you doing something?
Oh.
Are you doing something outside of PowerPoint?
Oh, can you not see? Oh, sorry. There we go. Okay, here, sorry. So here's what I was showing everyone in person. So we have some of the standard operators, just the 2 + 2, asterisk for multiplication, all the standard stuff that you'd see in Excel. And then here's what I meant by the floats. So if we multiply an integer by a float, it'll always be, it's going to turn out to be a float. But if we just multiply 2 integers together, it's going to turn into an integer. And then over here, so the mod operator, it'll give us the remainder. So for instance, 7 divided by 4, it's going to, or 7 mod 4, it's going to show it has a remainder of 3 because it goes into 7 once with a remainder of 3. So that can be really useful if you're trying to check for if something is an even number and you have a whole list of things like in Excel. So, but it's covered, but you don't know what the numbers are because it's covered by a variable.
How do you access the output?
The output, so so I'm hitting Shift and Enter at the same time. Okay. And then we also have power. So if we want to, so for instance, we use 2 asterisks to note to the power something like, so that to the power of 2 or squared. So, make sure. Okay. Oh yeah. Yeah.
One thing you can do, you can stop share, share screen, and you click that very top left.
Very top left, just this one.
And then it will share wherever you're on.
Okay. Okay. So next, let's create some variables. So data types aren't very useful unless they represent something. So for instance, I have a variable here named my age 24, and then there's some rules about naming variables. So we typically in Python we use snake casing to name variables, and you don't have to do it. It's just common practice. So that means that you use an underscore in place of spaces. If you try and use a space, I'm pretty sure it's going to give you an error. And then we also don't use any capitalized letters. And we also want to avoid using keywords such as list and str because those are built-in variables by Python, so you're going to get an error. And then also you can't use any of these special characters right here. But if you try and use one of these, the ID is probably going to tell you, give you an error and tell you that no, you're not supposed to use those. So Python also uses dynamic typing, which means that we can, once we have a variable already in, like my age, we can change it. So I'll show you what I mean by that. So here, I'm going to create a variable, type, and then equal to, and if I type if I just type in the variable name, then hit enter, it's going to come up with what it contains. But I can reassign it. And then I type in my age again. It's going to give me the new value. So that also applies to the different kinds of data types that you have. So my age is an integer, but if I wanted to, I could change it to something like a string. And it's going to change the data type. So that's pretty useful because it speeds up the development time, but it also can lead to some errors if you're not keeping track of what's what. But there's a type function that you can use to keep track of it. So for instance, right now, if I just wrap it kind of like in Excel, wrap the variable, it's going to give me the string. It's going to tell me it's a string. Here, let's make another one just to double check. Type. And it shows you it's an integer. Okay, so let's move on to strings and indexing. So strings are an ordered sequence of characters denoted by either double quotes or single quotes, but not both. So right here you have hello world in single quotes. I don't do that, which you see that single quote right there. That's why we use the double quotes, because if we start off with a single quote, I'll type that in the ID so you can see. Start off with a single quote and start typing. I don't. Once we get to that apostrophe, you see how it changes colors? That's because Excel thinks that, or not Excel, Python thinks that you stopped your string right there. So that's why we use the double quote right here. And see it has it's all colored the same way. It lets you know that it doesn't think that it was cut off quite there. And a little reminder right here that strings are not just for like letters. You can also put numbers. You can put the special characters. And so here, let's go on to indexing. So because they're ordered, you can use indexing, which means that, so for hello, the letter H is at index 0. It's basically ordering, what is the ordering of if you're asked to spell it out, what's the order of the letters? But Python starts at, and most other languages, they start at index 0. And then go to 1, 2, 3, 4. And then there's also reverse indexing. So if you wanted to grab the very end of a string, then you would start with negative. So -1 would be 0, or not 0, O. -2 would be the L. So if you wanted to grab an index, and I'll pull that back up, or grab a character using indexing, we would type in the variable name followed by the square brackets and then the index number right there. So with variable name, square brackets, index. So I'll name this, I don't do that, or and if I wanted to grab the first character, that'd be 0. I'm just gonna pull up I. Grab the last character. Get a T right there. So we also have slicing. So I just showed you how to grab one character, but you can also grab well, a whole slice of it, a chunk, and that's denoted by colons. So within that the square brackets that I showed you earlier, we have the start, stop, and step. So the start is where obviously where the slice starts. The stop is up to, but not including that character. So if we were to put the stop to 4, it would only return HELL. It wouldn't bring us the O as well. And then step is the size, is the jump size. So here, I'll show you, it'll be easier to show you. So we have 0 and then colon, because that's a 0 for the start, 4 for the stop, another colon for the step, and we have 2, so it means every other one. Instead of, if we put 1, that'd be just go every single character. If we have 2, so you can see here we started at I, and also it counts the spaces as they're counted in the indexing, so it would be 0 and then 1, 2 would be for the D, and then we start, and then 3, 4, so we don't include the N because it's up to and not including, and we also have a step size of 2. So we started here. We don't count this, but we do count the D.
What if the colon 5?
Colon.
Any colon 4, colon 5.
All right, for the stop or the.
What if the step is greater than?
Oh, the step is greater than. It would just be I, because it starts at the very first one, and then the next one that's going to count is the 5th.
Oh, I see. Okay.
Mm-hmm.
So it doesn't count spaces?
No, it does count spaces.
What was the very
Before the parentheses, A, because that's the variable name. So you can see right here, I named the variable A is equal to the string, I don't do that. And then we're grabbing right here, so we have the start, which is 0. So and 0 be the I, because that's the very first one. And then we have the step size. So I'll make the step size a little greater. Just do a step size of 1. It'll count every single character there. Step size of 2, every other character, and so on. If we just don't include the step or the stop, it'll give us the whole string, every other character. So I also have some exercises here. So first one is create a variable named name that contains your name. And then using indexing, grab the first 3 letters. Create a variable named squares that is any number to the 2nd power. And then after you've done that, try and rename it because it's dynamically typed to, or not rename, increase its value by 10. And then, here, ignore this last one. I actually have a couple of things I need to show you before we do that one. So if you guys want to see if you can get these and if you have any questions. Does everyone have it? Or any questions? Yeah, actually, I forgot to show you something on that one too. Mainly just the first one. If you all were able to name a variable with your own name and then grab the first three. Everyone good on that one? Okay, so I'll go back to. So here's what I forgot to show you about dynamic typing. So if we have a variable a is equal to 10, and then we want to redo that variable, so we want to increase it by 10. Like in my example, we can do a is equal to, and we can have a self-reference, so a is equal to a plus 10. Call upon a again to see what it is. I'll show you 20. And that works the same with other variables too. So if we had b equal to 5, a is equal to a plus b, increase it by 5 or by b. So if you guys notice on every single output, there's this right here. That's because what it's doing is it's returning it. So it's, if we were to write a program that other people would see, like a menu, for instance, or a calculator, and then and the user input right here, where we're inputting the same way, it would calculate it, but it wouldn't show it to the end user. So for that, we need to create we need to use a print function. encoded brace or in braces. So if I wanted to print A, notice how there's no out right there. And then later on, once we get to user input, it'll become easier to understand what I mean by that. And then here, one of the last tricks I was going to show you about strings was the escape sequences. So I had, what I named the other variable. Let's run that one again. Okay. So we have, or I'll use a different one. So we have certain escape sequences like new line, which is noted by, where is it on this keyboard? Oh, here it is. By the backslash and N. So if we ran that, or maybe it was actually. Okay, it's supposed to print it on a new line. I'm not sure why it's not working now, but what you'd see is hello, and then right underneath that would be world. Yeah, and then so backslash N for new line, and then T and backslash T for tab. Yeah, I'll try to figure out why that wasn't working there next time.
Just saying you needed quotes at the hello and
Quotes at the beginning of hello and
hello, close quotes, slash N, open quotes, world.
Yeah, that I was practicing beforehand just to make sure everything was right. Like I was doing it on my computer and it didn't need to that. But that's all I have for you guys today.
You might want to get everybody's names and emails or have them email you.
Oh, yeah.
Email up. The people on the chat, if they.
Yeah, here's my email.
Email in the chat, we'll get the chat
Mhm.
file. I can send it to you.
Yeah, so here's my email and phone number if any of you guys want to take it down.